Good morning, everybody. It is Friday, May 17th, 8:45 a.m. We are back once again on another market open, and I have a realization that I have come to this morning. I have a realization. It took me about 48 hours to officially get this realization to be secure in my head, but the realization is here, and I officially have come to the realization. And the realization that I've come to, ultimately the realization that I've come to. Wait, are we even live? Oh yeah, we're live. Okay, the YouTube on my iPad was saying we're not live. The realization I've come to is that I am old. Okay, is that I am old. That is the realization I've come to. Now, why did I come to this realization? How did I come to the realization that I am officially old? My neck has been in pain for 48 hours. Yesterday, I didn't say anything about it. I was like, you know what? Maybe I slept on the wrong side. It was hurting. As soon as the market open was done, I was like, oh my God, this is like actually in pain. This is like hurting. But I said, you know what? It's okay. Like your neck could be in pain. It happens and you'll move on from it. Slept early last night. I said, I'm going to be okay. I wake up this morning, nothing has changed. I like put the pillow under the neck. I put some like fucking whatever you call it, the biofreeze on my neck in the morning. Still in pain. And so I think it's just, I'm going to be 27, pushing 30. We're getting there. I know people in the chat are older than me. I get it, but still pushing 30. I think my neck is just, it's done, dude. Like I don't know what to do about this. And so for anyone who's going through neck pain, back pain, I sympathize with you now. I feel the plight of what it means to be old. At 26, it's done, and the healthy body is gone, and now I have to reconcile this neck pain. So, granted, it is Friday, and that helps resolve some of the facts that I am getting older and my neck is hurting. We've got a lot to talk about, folks. Robinhood, the biggest upgrade of their life. That'll be our first topic. That happened this morning. I did not expect that to happen. Woke up, saw that. I was like, all right. Gamestop, they are diluting shareholders or have the potential to now dilute shareholders with a mixed shelf offering by 45 million shares. On top of that, they're missing their revenue projection. So we got a lot to talk about when it comes to the meme stocks and GameStop. Faraday future. Remember that thing at the end of the stream yesterday that I was just like, wow, this thing was 6 cents. Now it's $1.03. And we almost bought 6,000 shares. I wasn't actually going to do it, but like we kind of played around with it. Yeah, that thing's at like 250 now. In the pre-market, we would have been up double. It is absolute insanity at this point on Faraday Future. So we're going to discuss that, what's going on there. Then we've got to talk about the macro. We've got money market updates. We've got U.S. 10-year updates, Germany, France updates in terms of what's going on in their economies. Bitcoin having a really good couple of days of inflows, 2 real positive net days of inflows. We're going to talk about what's going on with Bitcoin, have some China updates, Microsoft, AMD updates, and a lot more to get into. Thank you, everybody, for being here. It's time to start the market open. Dougie Fresh, Ray, Felicia, Eric, Nolan, good morning, good morning. Tony Bags, what's up? I'm Beneficial, Chris, Sergio, Cause Why Not. Ian says, happy 27th birthday, Mitt. Finally, it's your birthday. Yes, it'll be my 27th birthday for the rest of the year, I guess. Dax, what's up? Raphael, Adam, I'm Beneficial, Jay Roberts, Mark, Katie, Torben, David, S. Kelly, B. Sove, Hector. Thank you all. Diane, Blake, William, for being here this Marvin, Lena, Bren, what's up? All right, so let's start off today with Robinhood. We'll get that one out of the way, and then we'll keep going from there. So I wake up this morning with my neck in utter pain. I'm not kidding, dude. My neck is like hurting. Like my neck is actually in pain. And I flip over, I log on to Twitter, and what I see is Robinhood up 5%. And I did not expect that yesterday. And there's a couple of reasons for why I expected a little bit more volatility today, outside of it just being a Friday that I'll get into. But we got one of the biggest upgrades of our life from Bank of America. Bank of America issued a $10 price target increase on Robinhood from 14 to 24. They had I think, underperform on Bank of America on Robinhood at $14 over the past couple of months. And they changed that to $24, which is above where we're at right now, $18.82 in the pre-market, significantly. And they upgraded them to a buy. Now, why is this important? Number one, Goldman Sachs, JP Morgan, Morgan Stanley, some of the elite firms on Wall Street that the reason they're elite is because they have access to millions and millions of investors. And when they issue a report, like pretty much everyone listens, right? Those are kind of the elite names of Wall Street, whether we like it or not. We didn't have any of them on our side. We had some firms here and there like Bernstein, JMP. I love these firms. They're awesome, but they're not the Goldmans and JP Morgans and Bank of Americas of the world. Today, Bank of America says, you know what? Robinhood's worth way more than what it's worth right now, and we're upgrading them to a buy, and that's a big deal. So here's what they said in their note. This year's rally in Robinhood is the real deal. We view the current entry point as the opposite of 2021, where we initiated an underperform after its IPO. So in 2021, when Robinhood was at $38, I think probably like $40 billion market cap, Bank of America was like, yeah, no way, underperformed. This is not going to do well. They were right. 4 years later, it seems like they feel the opposite is happening. Number one, rising retail engagement and accelerating organic growth. 2, positive operating leverage after large expense reductions. 3, an attractive valuation. I have been saying this for a while. You know the beauty of seeing this morning? The beauty of seeing this morning made me feel like I wasn't insane. Because I've been saying the valuation, $5 of their stock is essentially worth $5 billion. So it's $18. You're realistically paying $13 for the enterprise value because they have $5 billion in cash. So to me, I'm like, it's growing 40% year over year, like at $13. That is absolutely, or 13 billion market cap. That is absolutely an attractive valuation. Actually, not the market cap is 15 billion, so it's a $10 billion market cap at $13 when you take off the $5 billion in cash, $10 to $11. So from that perspective, I think Bank of America is right on it as well. They say following the emergence of a new bull market last year, we have monitored a rebound in multiple metrics at Robinhood markets, 44% organic growth, 60% year-over-year trading activity for payment for order flow, and we expect this to continue through 2026. And that is why Robinhood is doing well this morning. Now, a couple points. What is the risk to Robinhood on this 5% gain? I think there's a couple of things to think about. We're going to talk about GameStop in a second, but GameStop has not done well this morning, to say the least. And because I do believe Robinhood is algorithmically pegged to GameStop and AMC, GameStop right here down 20%, and Bitcoin. So Bitcoin's up while GameStop's down. So, the algorithms are trying to, and they got this massive upgrade. So the algorithms are trying to figure out what to do with it. And right now they have it up 5%. That could create some volatility if, GameStop and AMC still struggle today, along with Bitcoin as it continues to go higher. So that's one thing to think about. The other thing to think about is that Bank of America on your side just means, in my opinion, it's really up to Robinhood now if they can capitalize on this. If Bank of America is like, hey, we think it's worth $24 and we think the growth's not stopping, if Robinhood just keeps proving, yeah, the growth is not stopping, then I think a lot of institutional investors, retail traders are going to be like, all right, like this story is ready and it's time for us to get in. And so that's what we got on Robinhood. So a nice upgrade to see this morning, exciting upgrade, and makes sense that Bank of America is now in it. Okay. That was Robinhood. Let's talk about GameStop. So we got some big updates on GameStop. As you can see right now, down 20% in the pre-markets. Why is GameStop down 20% in the pre-markets? Well, the main reason for that is not only the offering that they're trying to do. Let me pull this up right here. But it's even deeper than that. So GameStop just announced preliminary expectations for Q1 revenue. Remember, they don't do an earnings call, so they don't really talk to shareholders, answer questions. They just kind of put out these numbers and, the street has to deal with them the way it is. Q1 expectations of revenue to be $882 million. This is down 31% from last year, $1.2 billion. Just imagine if your stock, a company that you're in, reported revenues of 30% to the downside. Right? Like decreasing by 31%. Obviously, there's something wrong in the company. There's something in the financials are not adding up. Maybe they're not growing as substantially as they need to, or even at a baseline level. So that's not good. Analyst projections said, all right, you're not going to do 1.2 billion, but you'll do 1.05. They said, no, we're going to do 882. And so that also was not the best. Finally, they filed a mixed shelf registration, which essentially means they have the right to sell shares on the open market, taking advantage of the surge in the price. Now, the question is, there's 45 million shares. I'll pull that up in a second. The question is, are they going to be able to sell shares at an attractive valuation, given, the price might collapse over the next couple of days? So this is what they said right here. Offered up to 45 million shares. Our charter authorizes us to issue up to 1 billion shares of Class A common stock and up to 5 million shares of preferred stock. As of May 4th, there were 306 million shares outstanding. And so this is the offering today. A mixed shelf offering. A CleanSpark did this as well. And I think they actually executed on the mixed shelf offering, if I'm not wrong, but it essentially means that they're not dumping 45 million shares today. This is what AMC did with 73 million shares at $3.45 last week. or not last week, like on Tuesday. But this gives them the opportunity to do it. So it's not literally being dumped. If it was dumped today, the stock would be down even more, but they have the potential to do it. What I think is going on in Ryan Cohen's head, CEO of GameStop, is basically saying, hey, we don't think this meme stock rally is done. We think Roaring Kitty is just getting started. We think the apes are going to buy up this dip down 20%. We think the sucker is going back to, $50, $60. And then let's do the 45 million share dilution. It is interesting they didn't do it the day of. Like, because AMC was like, okay, we're going to do it the day of. And AMC right now down about 4% as well in the pre-markets. If they did it the day of or the day after, they would have gotten at $40-$45. But maybe they felt they would have pissed off a lot of shareholders. And this is pissing off shareholders, but not to the extent where it's already happened. It just has the potential to happen. So shareholders are actually thinking, well, they haven't diluted us yet, which means we have an opportunity to keep buying up the stock until the dilution happens, which may be more strategic in the long term. On top of that, we've got Andrew Left from Citron Research. He shorted GameStop back in 2021 at $90 a share. He had to cover his short, lost 100% of his money. He is back to shorting GameStop. Yesterday, he announced that he's officially shorting GameStop again. And that also might be a bit of a catalyst for why the apes get excited for GameStop to come down. Andrew's probably happy today, given these revenue projections. But the apes now have an enemy, in my opinion, and that enemy is someone they can rally behind and basically say, this is the guy we got to go after, and that can at least incentivize and motivate people to potentially buy up the stock, which is what it seems like they need right now, because the Roaring Kitty tweets are not necessarily doing that at this moment. Here's a clip. I want to see if I can share this right here. If not, I'll share it in a second. Can I share this one? No. Okay. We're going to share this in a little bit, but I got a clip from what's his name? Stanley Druckenmiller talking about shorting stocks. I'll share this in a bit. Oh, here we go. Yeah, okay, now I should be able to share it, where he's explicitly talking about the dangers of shorting and what it's done in his life. So here's a 1-minute clip on Druckenmiller talking about what his relationship has been with shorting companies.
Frankly, I'm not sure I've ever made money. If I took back the last 40 years, I'm afraid to look. I've never had a down year, but I'm not sure I've made money in shorts. I like it. It's fun, but you can get your head handed to you. And it's a game that really only professionals, and the math's against you. If you're dead wrong on a long, you can lose 100%. If you're dead wrong on a short, you can lose 10 times your money. And when I was at Soros, I shorted $200 million worth of internet stocks in March of 99, and in 3 weeks covered them at a $600 million loss. I lost $600 million on a $200 million investment in 3 weeks. I was short 12 stocks. They all went bankrupt. Every one of them.
Don't try that at home.
So
that's an interesting thing, right? I saw that last night and I was like, huh. So in the height of the .com bubble, Druckenmiller was like, look, these stocks are obviously overvalued. It's time to short these guys. He was right. He was wrong on the timing. And so same thing with the GameStop dude, Andrew Left in 2021. He covered his short at 90. The thing went to 483. So he would have been in really deep shit if he let it go that high. But eventually it came back down. And I'm not fully sure on the mechanics of shorting and how long you can wait until you have to cover. I think it's until you get a margin call or until there must be some more technicalities around it. But if Andrew had just waited another like 6 months, he would have made profits on those shorts. But at 90, he got scared because this thing could go to the moon. It did go to the moon, but then it came crashing back down. And so what Druckenmiller is saying right there is like, look, the shorts are getting excited about GameStop, or he's implying that, you could get excited about a stock that you think has a great candidate to short. But the timing of it is so unbelievably important that you could be right on the thesis. But if the thing keeps moving like it did in the .com bubble, you could lose 3x your money. You went from 200 million invested to 600 million in losses. And so I think the people that are shorting GameStop, they just have to remember, I don't think the story is done. In fact, I think the story is just getting started. And on a couple of red days, it seems obvious in hindsight that, oh yeah, paying $70 was ridiculous. Even paying $22 right now is ridiculous. The PE is still like 1,200 at the current moment. But the apes are invigorated. They're ready to go, and they are excited now that they have an enemy and potentially now have an opportunity to have a reason to buy the stock and continue to pump it up even further. Let's talk about Faraday Future. So this bad boy is up 67% in the pre-market. This is just it's just one of the most insane stories. Volume yesterday was about 1.5 billion, and it's up right now. at 67%, $2.77, 165. It closed yesterday. We were looking at 103. Now it's at 277. I've actually changed a little bit of my opinion here. I'm not buying the stock, and I don't think anyone should buy the stock. I think it's a very risky thing. But I started thinking a little bit more about these meme stocks, and I started realizing they're essentially meme coins. And what people are doing in the crypto world when it comes to meme coins is that they're finding underutilized assets, if you want to call them assets, and they're forming communities around them. We've seen this a lot with a lot of the meme coins on Solana, which is one of the most popular blockchains for meme coins. And these communities are engaging in the memification, which is a real thing. You could call it not something that is a worthwhile fundamental term for investing, but it is a thing that can capture attention and then drive up a price of an asset. And we've seen this with something like WIF, which is a coin that was worth $100,000. It's called Dog With Hat, literally called WIF. No fundamental purpose, but it was a $100,000 market cap. Now it's a $3 billion market cap. So if you got in at 100 grand, I mean, you're up a lot of money because a lot of people formed around this idea that this thing is worth something. And really what it's worth is the community, the laughter. If you search up WIF on Twitter, like the $WIF, you're going to see a lot of influencers kind of talking about it. And it's this movement that these people have wrapped their heads around. Now, do I think that's a meaningful movement? Do I think it makes sense? Not to me necessarily. I think like the Palantir movement or the Tesla movement makes a lot more sense, something I can understand at a more fundamental level. But nonetheless, it is a movement, and there are groups of people that have bought into that religion. And if they've bought into that religion and they believe in it, and that coin is kind of the savior of the religion, then the asset's going to go up. I think the same thing is happening with Faraday Future. I am not going to partake in the rally or in the momentum of it because I don't know when this thing collapses. Same thing with GameStop. If I got excited at $40 because I thought it was going to $100, I would be down 50% right now, right? So you just never know. And I think the easy money has been made from 7 cents, 6 cents, even $1 yesterday. Does it pump to fucking $4 or $5? Maybe, but it's a bigger risk now. The one thing, the point I'm trying to make is that it has been memeified. And Faraday Future is the embodied catalyst of the meme. And I think, I'm not sure exactly what the meme is, where dog with hat, it's a lot more clear. It's a dog with a hat. I'll show the picture in a second for those that haven't seen it. But the meme for Faraday Future is that it's still 93% short, and they want to squeeze the shorts and build a movement around it. And they've rallied a bunch of people. And if they've rallied people to do that, then there you go. There you go. That's what's happening. Here's dog with hat. This is literally the dog with the hat. It's a really cute dog. I'm not going to lie. It's a very cute dog. By the way, I want to get a dog one day. I feel like I just don't want the responsibilities of having to take care of the dog, but I feel like I could. I just don't want to, but like, I want to have a dog, but like it's a cute dog, right? So dog with hat. And this is what people are buying into. The market cap of this thing is now $3 billion. It was 100,000. So from that perspective, I do think there is a movement around this whole meme stock thing. And at the end of the day, if you're trading it, you're trading it. And like, I don't think people should be looked down upon for trading or getting into this or buying into this movement. But I do think, same thing with GameStop and AMC. I've never been one to look down on these people. It's just one thing around how big is your movement? Can your movement withstand the hedge funds? Can your movement withstand, Roaring Kitty not going on YouTube and live streaming? Do you have enough juice there to actually be able to build something? And Faraday Future is proving that they're the ones that have the juice. And maybe it's because it's 94% short, whereas GameStop's only 24% short. So the real squeeze that has yet to presumably happen yet for Faraday Future is in that stock versus in the other stocks. Now, again, I'm not in this. I'm not getting in this. I personally don't recommend getting in this because I think it's very, very risky, but it's based on your risk appetite. And if you want to get into that ecosystem right now with Faraday Future. I hope some people aren't married to Fife, divorce that hoe at some point. Yeah, I mean, look, if you're thinking this is going to be the next $10, $15 stock, maybe it is, but you've got to ask yourself, like, if you're up a lot on this thing, like GameStop, dude, people got in at $9 and it went to 50, and then, they're sitting on a 4X, whatever, and they got greedy. I mean, now it's down to $22. You got to ask yourself, is it time to cut the losses, or do you hold on for the ride? Same thing with Faraday Future. You got in at $1, got in at 40 cents, 50 cents is at $2.79. You have the exit liquidity being given to you right now. Are you going to take it? And I think that's where, but then again, if you don't take it, that's where the movement begins, right? Because with dog with hat, it's still at a $3 billion market cap. People aren't selling. People are keeping that up, And so maybe this thing ends up becoming one of those things that can continue going further. It's just a question of what's your risk appetite to engage with it. Hector says GME is not over, Amit. I agree. I don't think it's over as well. I think it's going to continue. The question is just, when it's going to continue. CRKN. Okay, let's look at this one. CRKN. Then we'll talk about Palantir in a second. Okay, here we go. This is up 74 cents. Sorry, 74%. What the hell is CRKN? Crown Electric. It's up 400. It was up 419% yesterday. Holy crap, dude. Okay, CRKN. I'm about to search this on Robinhood. Are you allowed to buy this? Wow, you can actually buy this thing. This is ridiculous. This is insane. Let me give you guys a stat on the Faraday future options. If you bought a 50-cent call on Faraday future on Monday, you would be up 11,000% today. Because the stock has gone up 4,600% in 2 days. I mean, imagine you put in like 10 grand or 20 grand or 50 grand, right? Like imagine you took like a little, it's just insane. It's just absolutely insane. So again, a lot of this stuff creates a lot of FOMO, and I know it's hard to fight the FOMO. It's annoying to fight the FOMO because you see people making a lot of money, really quickly, but this stuff all can crash and burn. And so it's one of those things you just have to reconcile with. $100 turned into 6,000 on Fife. Yeah, exactly. And so there we go. Amit, what did Vlad say about gold credit card risk? Yeah, I saw. So on Finance Junkies, I saw there was a little bit of a debate yesterday. I know. Let me share this real quick. So Data Driven Investing, good friend of the channel, he was watching the show yesterday. Chris got into a discussion with TJ around the credit card risk, and then I'll talk about the Robinhood crypto thing in a second. And Data Driven Investing said the Hood Gold Card is a risk for Robinhood because it's so Chris made the argument that Robinhood's not really taking on the credit issuing risk. Their community bank, Coastal Community Bank, their partner is doing that. They're just like a branding intermediary to be able to create all the capital and transactions and the volumes and the traffic, etc. And Data Driven Investing, who's one of our resident SoFi bulls, he was like, no, that's not true. And then Chris says, well, wait a second. If you just look at the fine print, the card is issued by the Coastal Community Bank. Coastal Community Bank is the creditor and the card issuer. From this screenshot, I think Chris is correct. Now, maybe I don't fully understand it. When I talked to Vlad about this, he just said, look, we are going to be very conservative. They have 1 million people on their wait list. They only let off 5,000. Like they literally only let off 5,000 people off of 1 million. And the reason for that is because they're not trying to jump into something super early. As you can see right here, 5,000 people. They're trying to make sure they do this very cautiously and they can control the way the credit is done. From what Chris is posting right here, it looks like he's right and that Coastal Community Bank takes on most of the credit risk. I could be wrong about that. I'm not fully sure. Futbucker here says Hood doesn't have a bank charter, therefore it's not their credit card. It's that simple. I think you're right, dude. I think it's pretty damn simple. They don't take on the credit risk because they don't have a bank charter. And so SoFi takes on all the credit risk because they are a bank. So does JP Morgan with their credit card, right? Whereas and that's why I like the thesis on Robinhood versus SoFi so much. Arnie was at my house last week and we were talking about this. Arnie was like, dude, one is a brokerage that functions as a bank with zero risk of a bank. There are obviously risks, but the defaults, delinquencies, they're not in the lending business. The other one's a bank. And so, and it doesn't even function as well as the brokerage is functioning in regards to the user experience that's allowing you to put your money into their application and use it theoretically like a bank. So from that perspective, I think it's good for Robinhood. Robinhood right now, $18.93 in the pre-markets. We got GameStop here down 18%. Faraday Future up 70%. It's $2.82 now. Crown Electric up another 70%. What's the other one you guys were talking about? GMAV or something? GWAV, Green Wave Technology. That one is up 47% after being up another 147% yesterday. This is just, it is what it is. Put in the chat if you're in any of these. Put in the chat if you're in Crown Electric, Faraday Future, or Green Wave. And if you're bold enough, put in how much money you actually have in these companies. Don't be shy. How much money? I can honestly say I have zero in all three of these stocks. And I'm just an observer seeing this go down. But put in the chat how much money you have in these guys. And if you've made any money. I mean, some people have been tagging me. Look, some people have been tagging me on Twitter like, yo, look at how much money I made. I made $3,000 because I saw you mention Faraday Future. And on one side, I'm like happy they made $3,000. On the other side, I'm like, oh, this is kind of risky, dude. You saw it on a live stream and you just fucking bought it. And I'm happy you made money. But like, it's one of those things where I want to be cautious as well, because as easy as you made the $3 grand, $5 grand, 10 grand, it could also be losing $3 grand, $5 grand. So please just be a little cautious getting into these things. And if you're seeing it on the stream and you're discovering it for the first time, play with money that you can lose. To me, it's a lotto ticket. And there's nothing wrong with betting on a lotto ticket. It's like betting on lotto tickets are fun, right? But you don't want to bet your, half your net worth on lottery tickets at the end of the day. And it really is a lottery ticket. I don't think there's a thesis there. You could say the short squeeze is the thesis. That's fine. But you better really know all the mechanics of that shit. You better be studying that shit like the GameStop bulls did in 2020. You better be like Roaring Kitty going through all the fucking statements, knowing that you're going to be right on that. Because if that's the thesis, to put up a lot of money, not just gambling money, you got to be right. Like you can't be wrong on that at that point. 2K profits on Fife. Okay, that's awesome. I'm beneficial. Futbucker, put a 7 in the chat if you have any interest in a little day trading boot camp. Futbucker is an amazing day trader. Futbucker, are you in any of these? I feel like you got to be in some of these, dude. I know you hate the meme stocks, but I feel like your day trading desires got you into some of these plays. We got FDG says 0 in this crap. Okay, so it's like split. Some people are in, some people are not. All right, so that's the update on meme stocks and what's going on in that world. Let's move on to some macro. Let's move on to the macroeconomic landscape of planet Earth. Okay, so does it ever hit you guys sometimes that we're living on planet Earth? Like, do you guys ever look up someday and be like, holy crap, like I'm on planet Earth? Like you look up at the sky and you're like, damn, that's I feel like we're like in a snowball and like the sky is like, it's like the round shape of it's like that snowball. And it's just like, we're just stuck in this snowball and there's no getting out until Elon fucking takes us to Mars. But like, you know, he's just one guy. Is he really going to be able to get us to, I mean, like, it's just kind of crazy when you think about it. Okay. Anyway, money market funds. Money market funds have increased by 16.36 billion to 6.05 trillion for the week. So interesting to see an increase, especially as the S&P hits all-time highs. I mean, I don't think there's much we can make of it other than, you know, corporations, individuals allocated some money to money market funds. I don't think it's really that telling. It's not that much money at 16 billion. I am interested to see, though, next week, given what has happened this week. Jerome Powell made some statements about inflation probably coming down. CPI came in cold. Where the market goes and where money market funds go. And again, Tom Lee's thesis has been, look, there's 6 trillion on the sidelines. Eventually, that's going to make its way into markets. We'll see if that happens or not. But if that does, then there's going to be some money coming in a little bit more. Presumably into the markets. I'm not a flat earther. I'm scared to ask in the chat who's a flat earther. It's just crazy. Sometimes you look up and you're like, oh, we're just on this planet. But there you go. So money market funds are increasing. Now, the 10-year, let's take a look at that. 10-year is also up a little bit today, 4.4. Where's the S&P? S&P 500 right now is at 529, up a little bit. US 10-year up just a little bit at 4.4. It was at 4.365 yesterday, so nothing too crazy there. And then oil prices are slightly up this morning, but still WTI crude down below $80 at 79, which is good to see. A couple of headlines across the world. France's jobless rate, or basically the unemployment rate, is at 7.5%. It is unchanged over the past 2 quarters and compared to market consensus of 7.4. So France continues to have a higher than 5% unemployment rate. Italy, I think, is closer, same, or at 8-9% as well. So sometimes when we look at the United States unemployment rate at 3.9% and people think that's high, it's like across the world, it's, you know, relatively low compared to everyone else. Second, Malaysia's GDP, their economy grew 4.2% year over year in the first quarter of 2024. This is accelerated from the downward estimates of 2.9%, and it's better than the estimates of 3.9% month over month for Malaysia. And I think the reason it's important to understand this stuff is because if we want to see the United States economy ultimately improve, we've got to see GDP projections across the world get a little stronger, which is going to be good for the United States. Now, last macro update, and then we'll move on to Palantir, is China. So here's the update on China that I want to talk about. Look, put in the chat if you're from Malaysia. I think we have some Malaysian audience. Put in the chat if you are from Malaysia. When Amit goes full screen, look behind him on the brick wall. There's a suspicious stain that looks like the result of a money shot. If you're talking about this is just this proves that the bricks are real, because as you can see, there's bricks and then there's like a spot in between the bricks, which proves that the bricks are real. Okay. So China. Updates from China. Industrial growth, 6.7% year over year. Beat estimates of 5.5%. Retail sales, 2.3% year over year. Lower than estimates of 3.8%. China urban unemployment, 5%, lower than 5.2%. And China year-to-date fixed asset investment, 4.2%. That makes sense that it's lower than 4.6% because a lot of liquidity and money is a little bit tough right now to achieve in China, given some of the geopolitical situations that we're seeing right now. As a result of these numbers this morning, Alibaba, which surged 7% yesterday, is up 1.06% today. Alibaba having a bit of a run here. I see a lot of people on Twitter saying Alibaba to 100. I think even Futbucker, I think you think Alibaba's going to 100, right? Alibaba, we know, is deeply undervalued. The risk has always been China. If that risk, we saw Michael Burry at 66% to his portfolio for Alibaba. He added 80% to JD. If the risk to Baba is not as intense as the market may perceive with China, I mean, Alibaba's deeply undervalued. We all understand this. The question is, do you think the Chinese risks are real? Someone like Michael Burry has put his foot in the ground and says, no, the Chinese risk is not real. And other people are agreeing that it is. And so I think if China makes it a more friendlier environment, we're going to see people pile into Baba because it is undervalued. The question is, how serious is China on making sure that becomes a reality? Okay, so that's what we have on the macro updates. Chicken Genius did sell Baba. Yes, I think he put on Twitter he made like 150 grand or something. So he did get out of Baba. I mean, I think he got in at like, what, 52 or something? Selling at 87, not a bad trade. So I remember I think he got into Palantir from like 7 to 9 and he made like 300,000. He made good money from 7 to 9 or like 9 to 11, one of those. But then he got out and Palantir ran to like 25, right? So we'll see what happens there. But yeah, I think taking profits on Baba if you got in at 50 is not bad. If China announces anything bad with their economy, which I wouldn't put it against them that they could announce things that are bad. We've covered on the show extensively over the past few months that things are breaking in China. That could lead to some issues with the thesis on Baba. But if not, again, if you don't think the Chinese geopolitical risk is high, then maybe Baba is not the worst argument as a deep value play. All right, let's move on to Palantir. So we talked about this yesterday on the market close. Those that didn't see the news or didn't see the Daily Palantir episode that came out yesterday, Stanley Druckenmiller, he's back into Palantir. 770,000 shares. It is less than 1% of the portfolio. I know it's not a lot of the portfolio, but the point is he's back with a $14 million purchase on Palantir. And I think he's back for a reason. He has sold about 70% of his NVIDIA position. He sold Palantir at $8, took the money, put it into NVIDIA at $150, and now he's back into Palantir. And he's paying a 2.5x premium to be back into Palantir. Now, what did he say about NVIDIA? He said, we had a hell of a run. A lot of what we've recognized has become recognized by the marketplace right now. I think that's an incredibly interesting comment because one could argue if he's back into Palantir trimming NVIDIA, maybe Palantir in his mind has not been recognized yet by the marketplace. I know Palantir is up 2.5x since when he sold. One could argue that as a recognition, but I think that's just, Palantir was deeply undervalued at $8, didn't deserve to be there. And it kind of just caught up as the macro economy improved as well. Now the question is, does Druckenmiller, and let's see if he adds more shares to his position in the next 13F, does he believe Palantir could be the next NVIDIA? And he believes there's a moat there when it comes to recognizing artificial intelligence. Here's Druckenmiller with Karp back in 2022 talking about the comparison between him and Steve Jobs from Apple. Let's hear what he has to say, and then we'll get to another clip of him talking about NVIDIA and the future of AI.
So there was a guy named Steve Jobs, and he broke the number one rule of business is he made products, not that the customer was demanding. He made this product and assumed if I make it, they will come. I kind of get that sense that you guys do that here at Palantir too. And I know that what a game changer Foundry was for you. Is there something else out there in the pipeline I don't know about that you could, I'm sure there is, but that you could disclose so I can think out a few years ahead of time?
There's the war products, which are like literally take small countries and make them into juggernauts. Like give everybody a slingshot. Every small country gets the power slingshot Palantir and can slay the monster coming to attack them. And there's like a number of them, and they're operationally useful and very.
I think we're watching one of them. It's not so small, but
yeah. Well, yeah, and it's having an enormous impact. And then there's the further uses of Foundry, which are really just at the beginning, actually using Foundry operationally. And there's Apollo. So like we're in a world where the outside organizations are disjoined and disjuncted and need vertical and horizontal integration to interact with their clients and with regulators and with supply chains. They have the same exact problem with software on the inside, which is how we actually have grown from a tiny company with, not growing headcount, but because we maintain our software with a product. Every single company, every single government in the world will essentially have to build something like this or buy it from us. And it's a very, very hard product to build. And that product is, like many of our products, kind of looks very not sexy in the beginning, but then powers a lot of the action.
And I think that idea of the product not looking sexy in the beginning and then powering a lot of the action, in that talk, he goes into all the things that their product was doing back in 2022. That might be Druckenmiller's realization around the marketplace not recognizing Palantir. 8 months after that video came out, AIP was launched. And AIP being launched was really interesting because I don't even think when Druckenmiller asked Palantir, hey, what do you guys have in store that I don't know about, that they even knew they were going to do AIP. But then ChatGPT goes mainstream, and in a month, literally ChatGPT gets to 100 million users in March 2023. In April, AIP comes out. And I think that shows a bit of the innovation around Palantir in terms of how quick they were to adapt and release new products. And then boot camps become the way to sell that product. So like the way Steve Jobs says, hey, the product will sell itself, and a B2C product, everyone came flocking to the iPhone. Palantir also believes the product will sell itself. Obviously, in enterprise SaaS, you can't just literally assume the product will sell itself. So the bootcamp methodology was born out of a product that is selling itself by showing it to customers, letting them use it, build data on operational workflows, and then decide they want to pay for it as a result of that kind of Apple philosophy. Hey, build the best stuff, focus on value. The customers will come. If you show the product to customers in these boot camps, it seems like the customers are coming now that they added 60 customers last quarter and have done over 900 boot camps. So it seems very exciting the route Palantir is going in regards to what AIP could look like, and Druckenmiller is starting to realize that as well. On top of the Druckenmiller investment, another piece of news that I think, again, just adds a little bit more to the Palantir thesis is Snowflake. They are in talks to acquire AI startup Reka AI. I think I've heard of this before, but I don't know a ton about Reka. They do make a lot of large language models for $1 billion. For more than $1 billion. The startup was founded in 2022. It was valued at about $300 million in a 2023 investment round, which included funding from Snowflake's venture arm. This to me is bearish. I think it's bearish. Now, look, I think Snowflake's valuation is not horrible at all, and I think there's a trade to be made on Snowflake. But this is the fourth startup that they are acquiring. They acquired 3 in 2023, and it now looks like they want to acquire another one. And in my head, I'm just thinking, dude, Snowflake already is a very big company. They're already spending a crap ton on sales and marketing. Now, in order for them to grow inorganically, not organically, because whenever you acquire, you're looking for inorganic growth, they have to acquire a startup for $1 billion. Snowflake right now in the pre-markets, they are down about 12%. I think they got to like 150 at one point or 149. It's up nicely at 165. I do think it is undervalued given the growth and given the fall off that they had from earnings. But I just can't get on board with them acquiring these many companies. To me, it seems like the innovation that we're trying to get out of these tech companies to become AI, superstars. With the Databricks CEO literally said Snowflake doesn't know what the hell they're doing in AI a couple weeks ago in an interview. These acquisitions to me are proving that they need AI into their ecosystem, and the only way to get it is by inorganic acquisition. And so I think it's very bullish for Palantir. We have not done an acquisition since 2016. We don't need to acquire. 1 month ChatGPT comes out. The next month we have a product that culminates the momentum of ChatGPT. We hosted 4 or 3 conferences on the entire AIP product. And now it's a question of just like how we can scale it versus how can we acquire other companies. So I think Snowflake's going to be fine, but I think as a shareholder, you got to wonder, like, why are these guys acquiring so many companies versus just building their own tech? And maybe it's because they care more about selling than building. And then it's like, that's fine, dude. But the valuation's $55 billion. They're trying to get back to that beautiful $250 IPO price they had. I don't know if you get there that easily doing stuff like they're doing right now. Acquisitions aren't inherently bearish. 100% agreed. The only reason I'm giving a little bit more of a bearish tone to this is because 4 acquisitions in a row seems to be like they're looking for an answer, and I don't think they're finding that answer right now, and that might be the issue. Okay, let's go to Druckenmiller as well, keeping on this AI trend and what he said about AI back in 2022 when he started buying NVIDIA and Microsoft.
I will say this about the AI. NVIDIA bottomed in October in the low 100s. It's true, it's 380 or 390. It's in nosebleed territory. If this is a secular move, if this thing is real, you just don't have 10-month moves. That's not how it works. Even the dot-com bubble lasted 2.5 years. For many of the guts of the internet, it lasted 4 years. The Cisco's, the Sun Micros. So could NVIDIA go down materially in the short term from any point? Yes, but I would be surprised if I'm right on AI and the impact on it. I mean, it's already making the top coders 7 to 8 times. 7 to 8 times more productive than they were 5 months ago. If it's as big as I think it is, NVIDIA is something we're going to want to own for at least 2 or 3 years, not for 10 months, and maybe longer.
So that's really interesting, right? Because this was from May 2023. Druckenmiller basically bet the fund on Microsoft and NVIDIA in October of 2022. So literally at the bottom, right? Or December, around that time. And then it was at 390 by May of 2023. That's when they had that rock star quarter back in early May, and the stock went from like 270 to 400 in a day off that earnings. And that was just the beginning of what was going to happen with NVIDIA. That's when everyone started shorting it even more, saying it's overvalued, and they've obviously proved that like they're the real deal. Now he's trimming. He has held it for 2 years from 150 to 950. I mean, he kept his word that we're going to hold it for a couple of years. A lot of people still think NVIDIA has room to run. I think they do as well. I think, we're going to get closer to 1,200, 1,500 as this thing continues to improve. The TSM revenue shows it. I saw some articles yesterday just showing demand for AI and chips is actually exploding in regards to what OpenAI is doing as well. So like the NVIDIA story is not done by any sense of the imagination, but he has to take profits because 150 to 950, I mean, even if it goes to like, I don't know, 1,400, given the amount of money he's managing, there's no point to like continue to just hold on versus take your profits, given the risk that exists as well. The reason I brought that up is because he says, all right, I got right on NVIDIA. I sold, and now he's trimming, and now he's back into Palantir. And as I'm thinking about that, I'm like, So he made his NVIDIA move. It made a lot of sense. He made his money, made 3-4x. And now he's like, where can I go from there with this capital? And one of the places he goes is Palantir. Another reason I bring that up is because I think we got to give Druckenmiller his props. And it goes back to, why I'm happy that he's back into Palantir. He's one of the only guys, to my understanding, and let me know in the chat if I'm wrong. Robinhood right here, 1898 in the pre-markets, Palantir 2175. He's one of the only guys on Wall Street that really bet big on AI. Like Warren Buffett didn't do it. Bill Ackman didn't do it. I mean, he bet on Google, but Google's not the Microsofts and NVIDIAs. Google's now just stepping into AI. I guess you can give it to Bill Ackman, but he came in a little late as well. At Cathie Wood with Tesla, sure, but like that's not the Mag 7. I don't know who else really bet on NVIDIA that's like has as big of a name as NVIDIA right here, 945, as Druckenmiller does. And so as a result of that, I think it's really interesting because if he, saw what was coming, as you saw, one of the examples he pointed out in that video was coders are already becoming 7 to 8 times more effective. I mean, it takes a lot of guts to be like, okay, so this technology is not a fluke. It's real. It's making people that much more effective. That's kind of how I think about AIP in the enterprise with Palantir. Eventually the revenue is going to catch up to it. And eventually the stock will catch up to it as well, which is what we're seeing with NVIDIA because of their explosive growth. Now, Palantir hasn't had that explosive growth yet, so they've got work to do there. But if they do, the stock catches up with it, and we see some more value there as well. All right, so we got 2 minutes of the market open, but that's the update on Palantir as well. Thank you, everybody, for being here. Good morning. We've got the Mag 7 on my screen right now. Of course, we got Faraday Future. That's part of the Mag 7, so it's part of the Mag 8. That's why I put it on this list. No, I'm just kidding. I put it on this list so that I could just track Faraday Future yesterday while I was looking at some of these other stocks. But why not? Why don't we leave it in the Mag 8? Because, a stock that's up 5,000% in 3 days. I mean, the Magnificent 8 could never do that. Amazon, Google, Meta, Microsoft, they couldn't do that. Only the Faraday Futures of the world could actually do that. So let's see what else happens from here. William says, do you think I should take profits before earnings? 276 shares at $400 to $500 cost basis. I'm assuming you're talking on NVIDIA. Look, obviously I can't give advice, but if I had shares at that cost basis, I would hold on to them for a very long time. I mean, if NVIDIA goes back to 400, the amount of people that would like sell their house to buy NVIDIA at $400 or $500, given what they know now, I just don't see it getting that low. Maybe there's a dip to 700-800 like we saw a couple weeks ago, but like NVIDIA, the story is the story. It's happening. They're going to blow past the 22.8 billion in expectations and revenue. And I think the story is going to keep continuing. Maybe there's not a ton of juice left this year, given the stock has run up so much, but it's one of those things I think you hold for a while. All right, here we go. It is Friday, May 17th. Thank you everybody for being here. 9:30 a.m. The stock market is now open. Wake your ass up. Faraday Future opens up 52%. We do have a red candle. There's a lot of sell orders coming in. It was at 270 of the pre-markets, 250 right now, 245. I'm very curious to see if this bad boy can keep going. You see this red candle continues to get larger. People are taking their profits, and it makes sense. It's at 240. People have doubled, tripled, quadrupled, quintupled, whatever comes after quintuple. Oh, there you go. The red candle is getting eaten up, and then the buy orders are coming in. This is so exciting, dude. Volume is 141 million shares on Faraday Future. It was $11 million market cap. Now it's $112 million market cap. Up, it's going up. That red candle is going green. It looks like it might go green. 60%. All right, we'll get back to that in a second. We'll get back to that. GameStop is down 20%. They are officially down. Robinhood, 1880 right now, up 5%. They got a Bank of America upgrade today. So Robinhood right here, 1876, up 4.8%. Bitcoin, 66,255. We'll talk about the Bitcoin inflows in just a little bit. Take-Two is actually up 3%. These are the guys that make Grand Theft Auto. They fell yesterday a little bit after earnings, but now they are up. Their earnings were not the best. I think they lost like $2.9 billion in the quarter in terms of negative net income, but they're up 3% on the day. NVIDIA 943, SMCI at 916, AMC 4% down. All right, so AMC is 4% down. Palantir basically flat. Palantir has been flat for a while right now, or basically since earnings at $21.66. Faraday Future 54%. Red candle starting to get smaller, trying to go back to 277, and people seem to continue buying up the stock. Green Wave Technologies, another one of these meme stocks, up 55% right now. Stock's 22 cents currently at the moment, and a lot of people think this is going to be the next Faraday Future, so they're piling into this one. Crown Electric is up 112%. Again, a lot of people thinking, hey, if the other ones went up, this one will go up as well. And so that one is now up at 52 cents, up 100%. And that green candle just getting bigger and bigger and bigger. There you go. It's up 130% right now. So there you go. Alibaba up 1%. S&P 500, 528. Where's the NASDAQ? QQQ, 452, flat on the day. Bitcoin again, 66,000. Cisco, they had earnings the other day. Not a bad earnings, but they are down 0.17%. PayPal, 64.16. SoFi, 7.14. Walmart, 64.08. Palo Alto Networks, Dan Ives put out a note today saying, hey, we're bullish on their earnings on Monday. Again, this thing ran from 275 to now 317. Nancy Pelosi got super deep into it as it collapsed after their last earnings, and it's right back to where it was before. And so she's into this one. Dan Ives, I'm reading his tweet right here. He says, while not expecting major fireworks on Monday after the bell, we view the seeds of growth are being planted for a New York Rangers-like Game 6 comeback for the Palo Alto Network story over the next 12 months. Palo Alto Networks continues to be one of our favorite cybersecurity names to own, and so he is bullish on Palo Alto. Robinhood 1875, Bitcoin 66,000, Apple 189, Take-Two 150, Faraday Future now falling a bit, 225. It was at 270. Now up 34%. It was up 60%. So that one now struggling just a little bit. TJ the Wheel Deal. Good morning. TJ is going to be joining me. TJ, I'm emailing you the link right now at 10 a.m. For wheeling options. So we basically decided, guys, every Friday as part of the market open, we're just going to do the show because it makes more sense to just do it as part of the market open. There's a lot of moves we have to discuss. TJ's made a lot of moves. I have some suggestions because I still have, if you guys missed the last episode, he's giving me $500,000 to manage of his $5 million. And basically I give him some suggestions on wheeling and selling puts, cover calls. And if he likes the trades, he executes them. And he's letting me play with a little bit of his money in hopes of, hopefully by the end of the year, I can kind of do what he's doing as well with my own portfolio. So that'll be happening at 10 a.m. and we'll discuss a lot of the moves that we made this week. Snowflake 162, Palantir 2170, Faraday Future at 237. That one is up 43% now. Mullen is down 3.65%. Let's go to Reddit. Oh, I forgot to mention, this was big news. Reddit is up 15% and they're up to 15% for a good reason. Katie says no Roaring Kitty posts yet today. Wasn't he posting like every 15 minutes yesterday? That is correct. Some people are saying that he actually is done posting because if you look at his last post, it was kind of like an exit post essentially that he made. And he was kind of like, if you look at the movie post, it's kind of signaling that he's done. I don't know if that's necessarily correct or if he just didn't wake up this morning and he didn't post, but we'll see. If he stops posting, that's not good for GameStop because his posts at this point are the only thing that are keeping this thing afloat. For those that missed it in the morning, GameStop is doing a 45 million share shelf offering, which means they can dilute shareholders up to 45 million bucks or 45 million shares. And their revenue projections came in 30% lower than what was expected, which is why the stock is down 20%. Okay, Reddit. Why is Reddit up 15%? OpenAI has made a partnership with Reddit. OpenAI has made a partnership with Reddit. right now. This was really interesting to me. We're bringing Reddit's content to ChatGPT and our products. They say right here, OpenAI will bring enhanced Reddit content to ChatGPT and new products, helping users discover and engage with Reddit communities. This partnership will also enable Reddit to bring new AI-powered features to Redditors and mods. Lastly, OpenAI will become a Reddit advising partner. This is kind of weird to me because Reddit already made a partnership with Google. And one of the fears when I saw they made that partnership with Google is like, well, wait a second, are they exclusively, that was worth about 60 million, making that partnership with Google so that other companies that want to license the data, which is incredibly valuable from Reddit in regards to, just the thousands and thousands of communities that are posting content there, is that exclusive to Google, to Sundar? Satya is like, nope, it's ours as well. Faraday future now up 63%, going green back on the day at $2.70. And so what it seems like is Reddit is essentially whoring themselves out to big tech and giving all their data. Sorry for my French. And as a result of that, the market is rewarding them, up 13% on the day, now $10 billion market cap on Reddit. They also had a really good earnings. They beat revenue by 30 million. They're basically profitable in like 2 quarters. They're definitely going to be GAAP profitable. And so Reddit, I don't think is that the craziest valuation, to be honest. I'm not in the trade, but I do think that the stock is not cheap, but definitely not ridiculously overvalued like a GameStop or AMC. And it's the home of where a lot of the GameStop AMC momentum is happening, which means maybe it's not the worst play on a lot of this momentum as well. Cooper Dog Baller says, I admit I bought $3 Faraday Futures 0-day expiration calls. I hope it gets to $3, dude. I hope you make some money on it. Cause I mean, the way it's looking right now, it looks like it's going to get to $3. One thing I was looking at, I haven't executed it yet, but I was just looking at it, is the options on Faraday Future in terms of the puts. So if we look at the Faraday Future puts, if you get a January 2025 50-cent put, or even January 2026 50-cent put, it's worth $40 right now. If you do January 2025, it's worth $35. I don't know, dude. If you think this thing's falling back to 50 cents, $35 as a gamble on the put is not the craziest idea to me. The question is, oh, wow, look, it's at $2.95. The question is, if this thing keeps going, is it going back to 50 cents? I don't know. Suspended. There you go. We got the halt. We got the halt. We got the halt on it. Boom. There you go. We got the halt. Wow, dude, this is crazy. This is, I just hope all of this shit is happening on Robinhood. I just hope all of this action is happening on Robinhood. I mean, that would be the funnest thing in the world if that's happening. Robinhood's down right now, it's not down, it's up 3.6%, but it's not up as much as it was after the Bank of America upgrade. The reason for this, again, is because if GameStop falls, Robinhood is pegged to potentially falling with it, given how I think the algorithms are functioning right now. I don't know this for a fact. That's just my hypothesis. The reason those algorithms are incorrect is because Robinhood is going to gain all the momentum from the GameStop AMC rally in the next quarter, even if, GameStop falls to like $0. So I think it's actually a good thing for Robinhood, but the market might be waiting to see Q2 numbers to really prove this. Bank of America did upgrade them today, if you guys missed it, to $24, up from $14. Very big upgrade on them. One of the biggest upgrades they've ever gotten. And now they just got to prove that they can keep executing. And I think they will reflect that momentum. Someone says the FOMO is real. Yeah, the FOMO is real. The FOMO is absolutely real. 100,000%. The FOMO is real. That's why we're seeing what we're seeing right now in regards to Faraday Future. The FOMO, and it's a Friday, dude. For this to be happening on a Friday, usually Fridays things tend to sell off, but people are ready to hold this over the weekend. I mean, $2.95 is actually insane. Do we know if Fife will be delisted, or do they have an extension on filing earnings? I have no idea. Rivers Courtesy, you're just bringing to my attention that if they have not done very well on their filing of earnings, which is necessary for any company listed on the NASDAQ, they could be at threat of being delisted. I didn't even know that was a threat. That potentially is a real major threat. It seems like the traders don't give a shit. But if they don't file their earnings soon, or get an extension to file earnings, if they haven't filed their earnings, I don't know if they have or haven't. I'm just assuming right here, that could be a threat to Faraday Future as well. No one cares though, because the thing's mooning and people are going to jump in. But that's one thing to probably think about if you're interested in this trade. Palantir 2186 up about 1%, seeing some momentum here. Reddit 6383, QQQ 452, GameStop down 22% on the day. Just disgusting. It's getting hit. It's getting hit absolutely. It's getting hit hard. If anyone bought puts on GameStop at $70, you got some momentum. Sandro says, what's a halt? A halt is basically when brokerages can't handle the volatility. And universally, brokerages are like, all right, there's way too many buy orders or sell orders coming in, so we need to halt And then I actually don't know what happens when they halt. I'm assuming they just get their shit together and then they allow it to be traded again. GameStop and AMC 3 days ago were halted 34 times in the span of about 2 hours. That's how much volatility was there. And so it seems like Faraday Future is now gaining most of the momentum. I think the GameStop bulls are also kind of upset that, Faraday Future is getting the momentum when this should be happening in GameStop, but it's not happening there because one could argue it's not shorted as much, which means the interest is not that exciting to GameStop. Whereas for Faraday, it's still a 94% short interest company. Let me actually pull up the short float right now. And we'll see. Mark says, OG here, since Amit didn't know what a circuit breaker was. Yep, I did not know what a circuit breaker was. Like 2 years ago, right? I think someone asked that on the channel. Someone was like, oh, there's a circuit breaker. I was like, what the fuck's a circuit breaker? I was like, is the electricity out or something? What's going on here? I think Chris was on the channel. He started laughing. He's like, no, dummy, a circuit breaker is blah, blah, blah. I was like, oh, interesting. Do we even have Faraday Future on Wall Street Journal? Oh, here it is. Okay. So their short float, they don't even give the percent of the short float. Wow. Shares outstanding, 42 million. Oh, well, basically we could do the math. 36 million are short. There's 42 million outstanding. So again, we're looking at almost 100% short, dude. Like it's 6 million shorts shares away from being short, which is insane. And so if that's the squeeze, then I mean, that squeeze can be pretty damn epic. Where's Bitcoin right now? Bitcoin, 65,991. So falling from 66,000. Okay. Inflows for Bitcoin. Let's talk a little bit about the Bitcoin inflows. Bitcoin has had a phenomenal couple of days of inflows. So let's just bring that up real quick. We've seen, so let me read this out right now. Yesterday, BlackRock bought 93 million. Fidelity bought 67 million. ARK bought 62 million. The other guys bought about another 20 million. Grayscale bought 4 million, which is good. It didn't sell because usually it has outflows. Net inflows for the past 2 days, 303 million, 257 million on Bitcoin. And that's good. You need that momentum if we want this thing to actually do what it needs to do, especially post halving events. So we're seeing momentum start to flow back in. MicroStrategy today up 2.82%. CleanSpark is down a little bit, 1643, and then Marathon here 1967. That's actually up 0.01%. And then Coinbase is at 202. Now, Bank of America also issued a note on Coinbase. Let me read that here real quick. Bank of America says on Coinbase they have upgraded Coinbase to 217 from 110. They're now neutral from underperform. So it's a pretty big upgrade for them as well. They say the current macro environment has been positive for cryptocurrency. Coin's expense discipline and ability to benefit from operating leverage following large expense cuts in 2022 will help maintain profitability. And they say they're going to be investing in mature coins, and the new bull market for crypto remains volatile. We believe Coin is a much better situated to take advantage of the operating leverage growth for going forward to drive bottom line growth, with the core capabilities on their platform now having been established. Coinbase to 217 is what Bank of America says as well. Where's DNA? We haven't looked at DNA in a while. Ginkgo Bioworks, 83 cents. I saw their earnings the other day. I listened to a little bit of it, and yeah, I think we talked about them before, but they're in a little bit of a pickle, and we'll see what happens with them over the coming months. But they did kind of switch their business model, and that's why stock is down. All right, Faraday Future is back from being unlisted or halted. 285 now, trying to go back to $3. Let's see if we can get there. 282 right now on Faraday Future. AMD as well. Yeah, AMD's been moving like a mother effer, dude. AMD 166. This thing bottomed at 149. Really nice momentum on AMD. Again, it's one of those things about these semiconductor stocks and AI chip companies. It's like they're not going to be held down forever. That's just not going to happen. And if that's not going to happen, then the question becomes the question becomes, when do people buy the dip? And at 149, 150, it seems like people were ready to buy the dip. All right, Faraday Future 285. Let's go to the Max 7, see how they're doing. Apple at 190, Microsoft 420, Meta 469, Google 175, Amazon 184, and Nvidia 942, down a little bit today, and then Tesla at 173. There is some news on Tesla as well. Let me pull that up in a second. Tesla is getting ready to get a new factory, I believe, in Berlin, if I'm not wrong. Yes, so Tesla has won approval for the expansion of its Gigafactory after meeting between community members and local officials in Germany. So that's good news for Tesla. Another piece of news on them that maybe is not the best news, but they've increased the price of the Model Y or Model 3 Performance by $1,000. Maybe they saw they had a lot of demand and they could afford to increase it by $1,000 because people were willing to pay it. Oh yeah, this is actually bullish. Sorry, I thought this was a cut. This is increase. So this is actually good because it means they're not having to have price cuts and mess with their margins on the Model 3 Performance. So that is actually good news as well. So Germany expansion and Model 3 Performance price increases seems to be happening for Tesla, which is very good as well. All right, Faraday Future 287, Google at 175. Where is Robinhood? Robinhood 1883, up 5.2% on the day. MicroStrategy 1485, Reddit at 6408, and then Qs here at 452. S&P 500 still at 428. Farfan says, greetings from Germany. I ordered my Model 3 last week. I love it. I love it. Nice to see more Model 3s being ordered across the world. Again, the math on Tesla is that they need to sell 531,000 vehicles for the next 3 quarters to CAGR at a 10% growth rate for their vehicle deliveries. And I just don't know if that happens. I mean, that's a little, at least I'm a little skeptical to see if that happens. But even if they don't get there, as long as FSD rollout starts to go smooth and the potential robotaxi rollout happens faster than expected, and they already said, hey, we're going to probably be faster than we expected, then maybe that rollout actually starts to go well. Here is Bespoke. This is actually a research investment firm that is talking about why we are in a bull market. Their S&P price target remains higher along with some of the other bulls on the street. Here's their argument for why the new highs actually maintain the bullish nature for the market.
Is up more than 20% from those recent lows that we saw last October. For more on what he's watching in the markets right now, we want to bring in Paul Hickey, Bespoke Investment Group's co-founder. Paul, here we go. Up 20% from those lows. I have a lot of people who are looking and thinking, oh my gosh, if I wasn't already invested, I missed out. What do they do?
I mean, I think people have been saying that for a while. You had your chance in April. We had a pullback. I mean, people made a big deal of this pullback. It was 5%. I mean, that's very run of the mill and things. But, the new highs confirm that we're in a bull market. The length of this bull market since October 2022 has actually been a little longer than normal, 19 months versus the median. But the gains have only been 50%. The median bull market sees a gain of about 75, 80%. So, there could certainly be more upside in the market here.
Which do you look to more closely, the percent of gains or the time frame?
That's just to put it in perspective. I mean, what we're constantly doing is watching what's going on in the market here. And, the underlying breadth of the market is expanding. Everybody's talking about last week about how the strength in utilities was this canary in the coal mine, that things weren't right in the market. But when you look at historically, when utilities hit new highs after not hitting new highs, it has historically been just fine for the market. And then when you look within the utilities, the gains have been so uneven. People talk about the narrowness of the market rally in the S&P 500. Just 16% or just 5 of the 31 stocks in the utility sector are outperforming the sector year to date. So it's driven by these subset of the sector, which are benefiting from the hyperscalers and the demand for electricity, whereas your typical traditional integrated utilities aren't performing nearly as well.
So you're bullish. Are you bullish because of fundamentals and earnings beats that we've seen, earnings expectations for the next quarter? Are you bullish because of the momentum factor?
So it's a combination of those things. The fundamentals of this earnings season we just got through, again, coming into this earnings season, expectations, analysts were lowering forecasts, and companies came in and beat those forecasts. That low bar sets the stage for a positive earnings. The two things we're looking at going forward that, you always want to worry about something are the sluggish economic data, which has been a concern. We've seen slower momentum in data and relative to expectations. The counter to that is the fact that if you are seeing periods of economic weakness, high yield spreads usually start to widen, and they've been actually narrowing. So you look back to the last 3 recessions, in the year leading up to a recession, high yield spreads were widening. Even going into the COVID recession, they went up a little bit. I'm not saying that the market knew COVID was coming, but we haven't seen that this time. High yield spreads have been trending down from 500 basis points a year ago to about 300 basis points now.
So, I mean, look, he makes a lot of sense. His argument is if the earnings are showing that the momentum is there, the momentum should be there, and the market's going to eventually reflect that. NVIDIA right now at 940. Robinhood here is at $19.21. So we're seeing a little bit of momentum here on Robinhood, up 7.2% on the day. Again, the Bank of America upgrade, I think, is a pretty damn big deal, dude. Bank of America stingy with their upgrades. They're not just going to give an upgrade to give an upgrade. I mean, they're going to give an upgrade if they believe that like this is the real. I mean, even in their research note, they said the rally happening in Robinhood is the real deal. And just saying that right there is just like, damn. So it's just cool to see the institution also see what we've been seeing, because we've been saying this for a while. Bank of America has had a $14 price target, dude, for a very long time. And they finally today woke up. You know what? This thing is not worth $14. I mean, $14 enterprise value will put it at 8 billion, 9 billion market cap, roundabout there. Or, well, no, the enterprise value would be 9 billion, but the market cap would be like 13 billion. So they kind of woke up and decided that a company compounding like Robinhood is not gonna, stay stuck there. So 1915 on Robinhood, up 6% of the day. Coinbase 201, AMD 166, CleanSpark 1662, MicroStrategy 1490. And again, the clip that we just saw, his argument there is that we are in a bull market. We showed you that chart the other day where if you try to buy and time your buys of the S&Ps from 1988 to 2023, historically, you'll average 40% over 3 years. Whereas if you buy the top, you will average 48% over 3 years in terms of returns, which means buying at the top versus trying to time when you buy, it's a difficult thing to do. But the markets tend to go higher over time as earnings compound. And what we're seeing in America, in particular with software companies that are leading this industrial revolution when it comes to AI, is they are compounding their earnings. And that's, I think, one of the biggest things that we're seeing. I've been saying on the channel for the past couple of months, if a company produces good earnings, they're going to get slaughtered. If a company produces bad earnings, they're going to get killed. If a company produces great earnings, they might get some momentum. And if a company produces exceptional earnings, the stock might go up a little bit, and a company really has to kick it out of the park to get some momentum. And that's exactly how it should be with interest rates the way they are. It should be that type of a scale. It should not be the market just throwing around money for no reason. Now, contrary to that, the meme stocks are overtaking and they're gaining some momentum. So one could argue that there is excess liquidity in the system. Faraday future up 72% on the day. But I wonder if that excess liquidity is not bearish. It's actually bullish. It's people that have made so much money off of NVIDIA or Amazon or Google or whatever, and they're throwing a little bit of a gamble into the Faradays of the world or the Gamestops of the world, etc. And so maybe the excess liquidity in the system is just like gambling money, not like people taking their net worth like they did in 2021 and putting it into some of these companies. And so maybe that's what's happening now as well. So that's what we've got going on there. Robinhood still continuing the momentum, $19.19, up 7% on the day. We have the chief brokerage officer, Steve Quirk. I actually met him at the gold event. He was wearing this super dope blazer. You guys know I was wearing the gold blazer. He was wearing a blazer filled with like dollar signs on it. It was like so cool. And I met him. Also, by the way, I'm going to put this in the chat and you guys can watch it whenever you want. But apparently Steve Quirk and Dan Gallagher, the chief legal officer and chief brokerage officer of Robinhood, they did a fireside chat back in 2022, right before, right when the market was kind of tanking. And it was a hell of a chat. And basically Dan Gallagher, this guy, the chief legal officer, everyone's scared about this Wells notice. He doesn't mess around. He was basically saying, I mean, just if you watch it, it's just so hilarious. He was basically like the SEC is full of shit. That's basically what he said. It was hilarious watching him. We'll probably play a clip of it in a little bit. TJ will be joining in 6 minutes. So for those who care about the options markets, TJ will be up in 6 minutes and we'll discuss everything about the world of options and what TJ is doing in his portfolio. But it was really funny to see him basically say, like, the SEC doesn't know what the hell they're doing. They think they're governing correctly. They don't actually know how to engage with retail investors. And one of his biggest things was like the SEC wants us to go back in time. They want us to recreate the UI. They had a problem with like paper trading. The SEC told Robinhood a couple years ago, hey, if you do paper trading, you're incentivizing people to fucking gamble. And Dan Gallagher is like, who was the former commissioner of the SEC. He's like, the fuck is wrong with you guys? Like, people can't paper trade anymore. Like, that's manipulating of the markets. Meanwhile, Warren Buffett doesn't have to say shit about Chubb's Limited that he's buying 26 million shares about, and he gets special permission to not disclose that. Bill Ackman can come on CNBC and say whatever the hell he wants. I've been thinking as well, CNBC is literally a place where someone can come and pump a stock. You get on CNBC, you say, hey, I'm bullish on this stock. Hundreds of thousands of people see it. They could buy it. What is the difference with Roaring Kitty tweeting about a stock that he likes on Twitter or a meme? He's not even saying the stock that he likes. There is really no difference. If anything, it's more discreet. He just has more influence, and that's what CNBC doesn't like. But the reason he has more influence is because people don't trust CNBC. They trust individual creators, and they trust people that they can actually relate to. So I think it's the same exact thing, but it's just a different attitude in terms of how it operates. All right, we're going to get started, folks, with TJ and wheeling. So that is the end of the market close. Market close is done. Now we are moving on to our next segment. We're probably going to be on for about 45 minutes to an hour with TJ. If you are interested in options, interested in cash secured puts, covered calls, how to make money off of your assets by being the casino versus being the gambler when it comes to options, I've got the privilege and honor to be joined with someone who does this for a living, knows what the hell he's doing, and is actually letting me play with some of his capital. And I'm so happy that TJ is here with me today. What's up, man?
What's up?
We have the word of the day, Sanjay. We'll do that at the end of the show. We'll do it with TJ. So TJ, we're gonna have to both make fun of the word of the day once we get it.
Let's do it. Is it going to be mediocre again, or what was the other one?
The word was mid, and I suggested an option for TJ, and he was like, "Oh, mid, like the option that you just suggested." That was hilarious. Before we get started, sir, how is your morning going? Have you had your coffee? Have you had your morning sex with your wife? I know you joked about that last.
I tried, bro. Always be trying. Nothing, bro. Absolute failure. The day I succeed, you guys are gonna know. You guys are gonna know.
All right, TJ. We got an interesting market going on right now. Where do we get started? I guess, pull up your portfolio and we can talk about.
You're going to do the word of the day. What happened to the word of the day?
Oh, we do that at the end.
Okay, gotcha.
So you made some moves in the portfolio yesterday. You texted me about them. I have some suggestions for new moves I want to make.
Mm-hmm.
And you can pull up the portfolio. We can see what's going on. Also, I want to talk to you about SoFi, given you have a big position there and it's kind of been stuck. And I want to know how you're navigating that to still be able to make money and keep going.
Oh, dude. My wife doesn't want me listening to Gary Vee anymore. She says that I curse too much.
Are you influenced of curse? I saw your wife also. You posted on Twitter. Your wife doesn't like when you respond to the trolls on Twitter.
Correct? Dude, I can't be mean to people anymore. Dude. And I'm like, so these guys can just shit on me, baby, and question everything. And she's like, it's because their life sucks so bad. So if they say anything negative about you, it's to make them feel better. So don't go to their level. Because they probably can't go to yours. But it's easy for you to go to theirs. One
thing I'll say is if Kristen's watching, I agree with her. I've been on Twitter for a couple years. Someone literally messaged me and said, kill yourself this morning. Like it's rant, dude. There's people in the world that are just upset for whatever reason. And if you respond to them, it actually gives them more exposure, So it's kind of just like, you got to ignore those. But
I think she's like, you show a trade that makes more money than they probably make in their entire year. And they're angry, they're angry. They're not angry at you. They're angry at their situation.
It's dude, I see this stuff.
Wow, dude. I mean, for real though, that's crazy.
I'm just like, okay, but like, what exactly is your version of painful death? Like, how do you want me to die? You just look at this shit and you're like, okay, your life obviously is not in the best situation. It's okay. I'm sympathetic to that. But you can't respond to that stuff.
So, dude, I just started muting people. Good idea.
Very good idea. It's a very good idea. And you don't even have to block them, because blocking them also makes it feel like you're a wussy, right? And you but if you mute them and you can never see their posts and they're just speaking to a brick wall, all right, it is what it is.
But did I listen to about 30 minutes to an hour of Gary Vee because I like his material, dude? But I noticed that when I listen to him, I curse a lot. Don't listen to him. Don't curse. So I'm like, dude, I think Gary Vee's a bad influence on my vernacular in general.
That's funny. I used to listen to Gary Vee a lot in high school.
It's like a way of life for this guy.
Yeah. In college, I listened to him a lot, but I stopped because I just, I kind of grew out of his stuff, but he curses. Yeah. He's from Jersey as well. He's a Jersey boy. So.
Yeah. He's cool. I like his info. I listen to a lot of people that make really big money. Because my thing is this, dude, quote of the day, if somebody doesn't have the life that you want, don't listen to them, bro. Like, don't listen to them. How are you going to show me how to get somewhere that you haven't been.
It's fair.
Like how? I'm just saying how, because at the end of the day, results matter. We talk about valuations in the stock market, but you know what really speaks loud is results, baby. And if your ideas are so damn good, why aren't they yielding you those types of results? That's why sometimes I do offer a lot of pushback to the trolls in the comments, because I'm like, if your ideas are that damn good, if your strategy is that damn good, where's your $5 million account? I'll follow you. And
that's fair. I don't necessarily think that's arrogance, because you're willing to listen to people's
bro, but I'm
suggestions.
just saying, if your shit is that damn good, why don't the results reflect it? Let's humble ourselves, because I wasn't this good either. I got mentors to help me. Dude. I mean, this life's all about cheating, dude. I mean, it's all about like find somebody that has what you want, do what they do, and you're gonna get what they got if you're willing to humble yourself and accept the fact that some people figure it out faster than you. That's why there's maps, because people already went there. So they drew a map for you, and now we got all this technology. You can go from point A to point B. That's what a map is. Somebody went there before you.
Do you come up with these analogies on the spot, or you pre-planned them? Like
they used to call me TJ Cliche Baby. No, but I do. I don't know why. It's because I read the Bible a lot, and there's a lot of analogies and metaphors and stuff in there. So I think that's just the way that I think. But let's get into it. And you said you wanted to play Radio Shack. You've got questions. I've got answers. What do we got?
Okay, well, I think let's start off with Robinhood, because that's first of all, how much money do I have left to allocate?
We'll check here and we'll tracker here in a second.
Yeah. Okay. So let's start off with Rob, because I have a question on Robinhood. So why don't you go through how the positions are doing, and then I have a question to ask you, and we'll go from there.
Okay. So let me pull up the tracker, because this is easier now. So here it's going to tell us our open collateral and everything, right?
Okay.
So if I can get this thing to.
Yeah, we'll do Robinhood first, then we'll do Shopify, then we'll do.
So here's Shop. I just clicked on Shopify first.
Hold on, real quick. Someone just said, "Does Amit know what Radio Shack is?" Yes. Okay, I know what the fuck Radio Shack. I shopped at Radio Shack when I was little. There was one near our apartment in Newark, New Jersey.
It was part of their commercial where they say, "You got questions, we got answers." I don't think they're in business anymore, right? Or there might be a couple.
No, I think this might be a couple, yeah, but they're.
Anyway, so there's $176,000 in Shopify. As far as cash secured puts, we don't own any shares yet, guys. We don't own any shares on anything. And then on Hood, there is
I think 30 grand, 40 grand.
No, it's more than that, but we've got 33, 8,000, and 31. So whatever that adds up to.
So 248. So I have left basically 252 to allocate. Okay.
Yeah. So over here, if I could just go to the summary tab, it'll tell me more info. So there's open put collateral. This is easier. So on open put collateral, there's 250 on Robinhood. There's 176 on Shopify. And then if I go to the other tab, there's another 97,000, or I'm sorry, there's another 70,000 in cash secured puts, because I thought it was a good idea to sell more cash secured puts on TSLL. So if you add the 70, you add the 176, and you add the 250, that is all of the money that is allocated.
Okay, so I have about 170 left. Cool.
So that is where we stand as far as that goes. And then now we can talk about the actual positions and go from there. Which one do you want to start with?
Let's start with Robinhood.
Okay, awesome. So you've got a couple of positions that are doing extremely well. This here, if you want to walk them through it, Amit, this is a 1650 put.
Yeah, so 1650 put, we sold expiring May 31st, which is 12 days from now. The idea was Robinhood will not go to 1650. Again, we are selling this put to someone buying this put. Right. And our idea is that if Robinhood does go to 1650, we would have to buy however many contracts we sold of this times 100 shares, which is 25. So 2,500 shares times 1650. We had to put up $41,000 in collateral, and we collected about 1,200 on top of that 41 grand.
Yeah, so it's 910, and then there's 325, so $1,235.
And so we're up 73%, which means theoretically, for those watching, we could buy to close this right now, capture the 70% gain, and get our $41,000 back and get to the next move.
So essentially what we can do is we can give back $325, free up 41K, and lock in a $910 win. So that always becomes the question, Amit. If we were going to put on this trade again, would we tie up $41,000 for a week? Because this is a 1 week trade now, right? This expires on when does this expire? 5/31? No, it's longer than that. It's a 2 week trade.
Okay,
So you already know what the math is.
Yeah.
Would you tie up $41,000 for 2 weeks to make $275? We know that the answer is no.
Yeah. We know
So at that point, that's when you buy to close, you free up the collateral, and you look for another play. And the play could very well be on Robinhood.
Correct.
We could just say, hey, 1650 doesn't make any more sense because Mr. Market says Robinhood is going back up to its proper valuation because perhaps it was mispriced. That's why this was attractive to us to begin with.
Correct.
But now we're not able to get any real money, any significant money as far as premiums go at 1650. So maybe now we need to start looking at 17 or maybe 1750 and do this dance all over again, take on a little bit more risk if we want to yield a little bit more reward.
Correct. Someone in the chat says, why did I see $16.50 puts? As soon as you see put, if you're not familiar with this strategy, you might think it's bearish. It's actually bullish because your argument is that Robinhood will not go to that strike 1650. And if it doesn't, you get to keep the premium the market paid you for tying up the collateral. If it does, you have to buy the shares. And if you want Robinhood at 1650, then that's bullish because you're happy to own those shares at that price.
Correct. We're basically saying, hey, we're planting a flag in the sand. At 1650, we're willing to own these shares. So it's either going to be below 1650 or above 1650. But the reason that we're having this conversation right now is because this contract has gone in our favor so quickly.
Correct.
Now we have to consider the time value of money, and we have to consider my favorite acronym in wheeling is called PPD, premium per day. So the amount of premium per day that is left is $300 over the course of the next 2 weeks.
Which is $21 a day for 41,000.
So can I go find something else that can yield me more premium per day for the same amount of capital and something that is just as high a conviction? Because that is how my ROI is going to climb, because we have to outperform the market, guys.
Correct.
We have to look at what are the big goals here.
Correct. So let's close this. Let's do it.
That's the thing. So I think it's a no-brainer to close it. So how do you close it? You essentially go buy to close. You type in 25 contracts. And then I don't want to give $13, but let's see if we can do it at $12. So we're going to give back 300 of those dollars. We'll release the 41,250 in collateral, and it tells you there you're paying 300 to buy back 25 open contracts, which will release your collateral and remove your obligation to buy the 2,500 shares. You submit, let it do its thing, and there it is.
Dude, this is so cool, dude. This is like for those that are watching, this is how I think outside of buying and holding long term, which is a great strategy. This is how I think money can be made in the market. It's not buying an option and hoping the thing goes to the moon. You maybe get lucky there. Maybe you get it at a really cheap price and it's asymmetric, and that's when it's smart. But 9 times out of 10, you buy an option, it's going to expire worthless. You sell an option, you have a chance to really make some money and turn it into a real business, not just, a gamble. And so we just made $900 in, we opened this last week. So in 7 days, made $900.
Yeah, so I have the tracker open here, Amit. So here it'll show you that we entered into this agreement on 5/9, and it was for 5/30. This is on rows 14 and 15.
Yep.
And so this was about a 3-week trade, give or take a few days, right? And we ended up closing it out early at 5/17. We gave back 12 cents of the 47 and 59 cents that we collected respectively, locking in a profit of 700 and 235, so 935 total. And we were in this contract for 8 days. So where in the hell are you going to make $935 and sleep well at night? I mean, dude, this was not a very stressful trade. I mean, this trade got challenged a little bit early on, but for the most part, because the big key here, Amit, it was conviction.
Yep.
Because the conviction is so high, it was like almost like you're willing to play quote unquote chicken, a game of chicken with the market and be like, give me those shares. I dare you, give me those shares.
Yep.
Because I would love to ride them back up anyway.
Correct. And so we made 900 off of 41,000 in collateral. That is a 2.1% return in 8 days. Now, 2.1% might not sound like, oh my God, you made so much money, but
until you annualize it.
If you annualize it and you look at if you can get 2% on your money in 8 days and you consistently do that, which is not easy, but if you can, and in a way that's a lot more safer than betting on something going to the moon, not the worst idea.
I mean, we got paid money for agreeing to buy these shares at a discount. That's a layman's term way of looking at it, guys.
Correct.
Because we're bargain hunters, but oftentimes when the market is very frothy, there's not a lot of bargains out there. So you have to be looking for opportunities, and it's tough. It takes a little bit of research and stuff. So sometimes executing the trade is the easiest thing. Finding the trade is the hardest thing.
Here's a good question. So Candosi says, how much gains would be worth if we had $41,000 of stock? So we sold this one, Robinhood was $17.50. So just rough math, 41,000 divided by 17.5. You would have bought 2,300 shares. Right now, they're currently worth 19.23. You would have made about $4,000 in those same 2 weeks.
But you got to look at exactly where it was trading whenever we bought those, when we would have bought those shares.
Yeah. So assuming it was $17.50, you would be up $4,000 today if you use the same $41,000 in capital. However, the question becomes, do you want to put $41,000 into a stock for 8 days? Right. This trade we knew was going to expire in the next 2 weeks. With Robinhood, or with any stock, if you put in that much money, if the stock goes down, you're down money, right? If it goes up, you're up money. But the question becomes, how long are you willing to hold it versus can you use that money for a set amount of time, take the gains, and then put it somewhere else? And if you can understand that strategy, I think it's different.
This is what this person's trying to say, and they're absolutely 100% correct. We're not arguing here today. Whenever you sell a cash secured put, the only money that you're qualified for is the premium. There's no upside potential for you. This is a premium cash grab where you're basically saying, if I can buy these shares at my price, I'm willing to own them. But for tying up my capital, you're going to pay me money. But all you're qualified for, if Robinhood goes to $50, it's irrelevant to you because we're never going to make more than the money that they paid us up front for the premiums. So when is cash secured put a bullish play? Kind of. A really bullish play is what I like to do, and that's called the buy right strategy, where you see an opportunity on a stock that you want to own and it's already priced where you're willing to own it. You buy the shares outright, and then you agree to sell a covered call against those shares, which is going to mimic the cash secured put premium that you'd have gotten. But instead of agreeing to own the shares or buy the shares at a certain price, you're basically saying, hey, I'll just buy the shares because I see the potential in riding the upside as well as collecting premium. So now I have two ways to make money. I have covered call premium, plus I have capital appreciation because I can only see the upside. I can't see the downside. So that would be an extremely bullish play. And that's probably the way that I own 90% of my shares is I don't wait for a cash secured put assignment. I buy the shares outright.
TJ, let me ask you, what is the bear case to just taking that $41,000 in collateral? And what if we had bought Robinhood at $17.50? Why didn't we do that?
Because we don't know where the bottom is because our crystal balls aren't there. And there was potentially, the market's been going up for a while, right? So we're a little bit cautious right now.
Yeah.
The market's never been here before, guys. When's the last time the Dow was at 40,000? Oh, never. You follow me? So this is all just new to everybody. So we don't know if there's a bubble that's going to pop or anything. So you want to be cautious about it. And yes, right now, technically, here's the other thing. Let's talk for a minute because we can learn something right now. That was the argument that I always had. Well, wouldn't it just make sense to own the shares and write them up because you'll make more money? Yes, if I knew how to buy at the bottom and sell at the top. But what's to say? First of all, it would have been very hard to pull the trigger there because the sentiment wasn't the best in general. We knew the earnings were great. You had already interviewed Vlad and his glowing hair and all this other bullshit. It all sounded great, right? But we didn't know that was the bottom, so you don't want to buy them at 17 something. We were going to be down about $1.25 a share at one point.
What if CPI, like, so Candosi says y'all at 100% conviction. Yes, Candosi, but what if CPI came in hotter than expected? It doesn't matter if our conviction at that point.
Right.
We're screwed, right? And so
well, you're bag holding those shares, and now
Yep.
we got to double down, and you potentially have a bigger position than you anticipated or than you wanted to. So my big thing is, if I know for a fact that I'm not going to always be able to buy, and never in my case, buy at the bottom and sell at the top, because this gain for Robinhood right now, we own the shares. We're only talking about a paper gain. You don't make any money unless you sell those shares.
Yeah.
Where I went to school. Here we're talking about an unrealized gain versus a realized gain. Here we're out of it and we made $900 and some dollars. Somebody that's holding the stock and is only watching, what happens if Robinhood comes back down to 16 bucks? They ain't making any money. They're just watching the stock. They're along for the ride. They're going on this emotional roller coaster, and it's not yielding any financial gains because Robinhood is not a dividend paying stock.
Correct.
So that's the thing, is we're trying to stack up some realized gains. And when there is an asymmetrical opportunity, meaning that the market is just absolutely mispriced, then at that point, hey, let's take ownership of shares amid, because the downside's here, but the upside is as high as the sky, so to speak. And that's when we want to own those shares. So obviously, Robinhood went where we thought it was going to go, but we didn't know for sure because there was some macro events that hadn't happened yet, right? Like the CPI, the PPI, etc. And then Uncle Jay, when does he talk?
Yeah, that's another thing. And the other thing here is that it looks like we would have made more money by buying the shares. But here's the other thing: if Robinhood stayed flat, meaning it just didn't go to 1650, we would collect. We wouldn't be up 70%, but we would be up enough to the point where we could ride the contract out and make the 1200 we're looking for. If Robinhood stays flat, your shares, they don't mature, right? It went up today. That's why you make money. But if they stayed flat, we win. If it goes down a little bit, we still win. If it doesn't get to our strike, if it gets to our strike, we can roll it and still win. If it doesn't do anything, if you have the shares, you don't make any money. And if it goes down, you actually lose money in the short term.
But now the other thing, if you want to go back to the portfolio, obviously Robinhood's up today because it got some upgrades, correct?
Yeah.
And I don't know, the market is up in general. I've got the TV on, but I'm not paying attention. So the other thing that we can start looking at is, okay, well, are we willing to do this again? You know, if you did it once, you could do it twice, right? Like the whole 50 Cent song. Yes. So now I'm like, what do we do? You know, it's like, what does it look like 28 days out? Would we make more money?
Okay, so here's my question. Here is my question. So let's go above 1930 where the price is. Let's go to the 2021. Here's my question. What is your philosophy on selling in a put above the current price?
In the money. It's called in the money.
Oh, sorry. In the money put, with the expectation that, let's say Robinhood is going to be above $21 by, I wouldn't do June 14th. I would do June 28th. Right. And you can collect way more premium because obviously you're losing the trade as soon as you get into it. But if the stock does go up, you capture that juicy premium. And in case it stays at 19 bucks, 17 bucks, you can just roll it out because you're still long-term bullish that eventually it'll get to $21, $22. Is that a smart strategy versus below the strike?
It can be. I like doing those long dated. I want to say that the technical terms for it, y'all help me out in the chat, guys. A lot of y'all are smarter than me and y'all have access to Google right now, because I can't Google and talk and do all that and walk and chew gum at the same time. But that's almost kind of like trying to be synthetically long on the stock versus not like actually owning the stock right now. So my whole thing is this, is realized gains are always going to make a lot more money than unrealized gains because we're stacking wins over here. Our brokerage cash and individual cash is climbing every time we put these trades on and we win these trades. So I'm just like, okay, cool. We made 935 bucks. Why don't we position ourselves to make another 935 bucks? And we do that 3 times over, and we're going to make that fictitious, that imaginary $4,000 that this person talked about. Just make no mistake about it. What you're talking about is imaginary because you're assuming that we bought here and that we sold up here. Let me ask everybody holding Robinhood right now. Is that exactly what you did? Is anybody that holds Robinhood right now, are you pushing the sell button?
Right.
And you're probably not, because it's not a good idea to do so. There's a lot of mojo with the stock. So that basically what you're also saying is you're not willing to realize any gains right here either. We were able to realize some gains, and that's the thing.
So overall, you think it's better to not be synthetically long just because the risk is a little higher versus definitely capturing the premium, even if it's not as juicy as
I've done it. Like I did it on SoFi at $12.50 a couple of years ago, and that's how I ended up owning a bunch of shares. Mind you, they had paid me $3 a contract.
Yeah.
So I was like, okay, cool. I'm in them for $9.50.
Right.
But dude, it's painful because now whenever you take ownership of these shares, if your thesis doesn't work out, because that's almost like you turn into somebody who's buying options at that point. You need something to happen within a certain amount of time. If I knew that, I wouldn't be selling options. You can make a lot more money buying options.
That's a good point.
So selling options is my margin of safety. Let's keep it going. Is there an opportunity to sell some puts on Robinhood right here, right now? I mean, we can. We're just not going to make as much money because we're going with the current. You want to go against the current to maximize your premiums, right? So right here, we own shares. Great opportunity to sell covered calls because you're going to make a lot more money because the stock's going up and to the right. When the stock is bleeding and you're trying to catch the falling knife, they're going to reward you for that by, putting a flag right there and saying, hey, I'm willing to buy them at these levels.
And the reason you would make more money selling covered calls when the stock's going up is because people are buying the calls.
Because there's always a chance that your strike price is going to get challenged.
Right.
Because you're going with the current. So you're swimming with the salmon. So whenever you're going in the direction of the market, the current direction of the market, they're going to reward you if you're basically saying, hey, I know that it's going here, but I'm going to put it right here. So they're going to reward me for that.
Correct.
And if the knife is falling, you're like, here's my hand. They're going to reward you for that because you're going to catch the falling knife.
It's basically like at a casino, you're on a hot streak and the dealer is like, hey, you want to keep playing? Because they know you're going to get a little greedy with this stuff.
Right.
And even if you end up being right, even if Robinhood ends up exploding or on the contrary, goes to the downside, the option seller, the house, they will still make some money, even if you make a ton of money. But the odds of you making a ton of money and the house losing a lot of money, it's just not the same.
Right.
So
anyway, good trade. Don't ever punish yourself for making money. That is another quote that you guys should put in y'all's journal. Don't ever punish yourself emotionally for making money, because there's a lot of people that are holding Robinhood right now. And God bless their souls. They don't have enough. They don't have 100 shares, so they don't even qualify to sell covered calls. And they certainly don't have the courage to sell those shares right now and realize a profit. So they're just riding an emotional roller coaster right now. And they felt real good because the stock is going up and in their favor. And it happens to us too, man. I love waking up to a green portfolio, don't you?
Yep.
But you're not really any richer that day unless you sell.
You feel like you're richer. You want to go out and get a little sushi, but like at the end of the day,
I'm just saying, dude, it's just, it just all makes you feel better. But I'm trying to grow the individual cash balance because that is the metric in the portfolio that if you keep growing your individual cash balance, you're winning. As long as obviously your stocks aren't, getting their ass kicked completely. So
does it make sense to sell a put on a really green day? Maybe we avoid it.
Can, because if it keeps running up, then you can probably find yourself at 50, 60% in a couple of days and you can grab more premiums. But the chances of owning those shares are going to be pretty slim. So the premium is going to be thin, but you might be in a situation where you're only in that trade for a little bit.
Okay, so let's look at the $17 strikes. Let's see what the market would give us.
I was looking at them just a little bit ago. So, I mean, if I was going to do this again and I'm like, I'm angry because, left all this money on the table or whatever, right? So I'd be looking right in probably the 1750 range.
Me too. Yeah, 1750, same.
It's a 23 delta. There's not a lot of liquidity there, but we're not trying to sell that many contracts anyway. Or I'd be looking at the 18 deltas.
I like 1750. I know you're going to say I'm a little pushy, but
no, it's safer, right? So let's just see, can we go grab some of that money that we left on the table? We just had 25 contracts.
Okay, so let me do the math real quick for those that are keeping up. So 25 contracts means 100 shares a contract. 25 times 100 is 20. You are telling yourself you have the obligation to buy 2,500 shares. The market's giving us what, 49 cents a contract, so $49.
That's what I'd be bidding it for. I'm like, hey, give me 1,224 because we left money on the table, right? 4,000. Let's talk about the 4,000. It might be 4,000.
DJ's mad about this 4,000. He's like,
no, I'm just saying because Robinhood's going up. It might be 4,500 now on paper.
Yeah.
So we locked in 935, and I'm like, well, why don't we try to lock in another 1,200? Now we're at 2,000, so now it's not so bad.
And that 1,200 is 25 times $49. That's how we're getting the 1,200.
And then if it goes against us, we can always backpedal and go back down to 1,650 and pick up maybe another 300-400, and then now we're back to where we started square one, except the difference is we've already pocketed a couple $1,000s in premium for riding this emotional roller coaster, whereas somebody who's buying, holding, and hoping, they haven't done shit except gotten excited, gotten depressed, gotten excited.
They haven't captured the gains. They haven't actually. Yeah, that's correct. And then this collateral is 2,500 shares times 1,750. That's our strike. We're obligated for 2,500 shares at 1,750. That's how you get 43,750 in collateral that we're putting up.
Right.
And this is how many days? This is 28 days. So this is a return of 2.7% potentially in 28 days.
Right. So the spread is getting really, really big.
Yeah, that might not. Well, maybe we should do 53 cents. Maybe we might. It's getting a little higher. Yeah. Let's do 55. Let's see if that fills. 51's too little. I think we can.
I meant to do 55, but
I know that's low.
You see how it's all over the place.
Yeah, the bid ask is crazy.
It's just because Robinhood's mooning right now, so it's like these things are getting repriced over and over and over again.
Right.
So
wait, how do you decide then how to pick your entry price when this thing is happening? Like
what I always like to do is I like to look at my moving averages.
Okay.
You got to go study the technicals a little bit. So what's the moving average on Robinhood right now, first of all? So you don't have to go at this blind. You don't have to just look at your deltas, right? Like deltas kind of like the cheat code, but you can go to yahoofinance.com, go under statistics, financial statistics, and it's going to tell you what the 50-day moving average is and the 200-day moving average. So if I'm trying to sell a cash secured put, I want to use those shields. I want to use the 50 and the 200 days of moving average, and I want to have my put right under those moving averages because it's going to be hard for the stock price to penetrate those averages.
So 50 day is 1787 and 200 day is 1264.
Right. So it just tells me that Robinhood's gone up and it's all been pretty recent. So we go look at the actual chart of Robinhood right here. If I look at the 1 month, I bet the 1 month is doing pretty well. And that makes sense.
But how does that determine the price you want to pay to get into the put?
What it is this is just the laws of gravity, dude. If something goes up very quickly, it stands to reason that it could go down just as quickly because it hasn't established a bunch of levels of support along the way.
Right. Correct.
It's a lot safer. That's why people like doing these boring stocks for the wheel strategy that don't move that much. It's all incremental.
Correct.
Because you can count on it to be at a certain price. We're playing price wars, right? Whenever you're selling cash secured puts and covered calls, you're playing price wars with the market on a stock that you're bullish on overall. And it's just, there's a lot of fluctuations in price there. I mean, just look at these movements. Look at how violent this is with Robinhood the last 3 months. And then if you look at it year to date, I mean, holy shit. Somebody over here at $10 is feeling really, really good over here. Now they're angry. Now they're starting to feel real good. They're angry, feeling really, really good, really, really angry. And now they're starting to feel really, really good again. But if you weren't able to time buying and selling, well, how much money have you made along the way? And
I think that's the philosophy that I'm really learning deeply from you. I mean, that philosophy is governing how I think of at least the options marketplace a lot more. Yeah.
So to me, like I love owning shares and then I love selling puts to buy more shares and selling covered calls against my shares. That way, while I'm playing this game with you guys, because I'm playing this game too, I'm at least making money along the way so that I can endure this emotional roller coaster and be compensated financially for it. Whereas
all right, let's sell those puts.
Watching the market and it sucks.
Yeah, I agree.
So anyway, dude, if you want to do something like that on the put, let me know.
Let's do it. Let's do it. So
Let me know.
1750, I think 55. Let's see if that fills.
So let's
And
go here.
you-
And it doesn't have to be there.
No,
We can go,
what'd you say?
go third Friday of the month, dude. We can go over here. That's where all the liquidity is going to be. So we can go there. There's no
Okay.
money.
One thing for Robinhood is TJ, their May metrics release on June 15th. So I was thinking June 28th, because if those metrics are good, we're probably going to be in a good spot.
Right.
But not June 14th. This is a day before. We have to do June 15th.
Right. So
Or
here's
June. Wait, let me look at the calendar. Where's June 15th is? Oh no, they're not going to do it on Saturday. So
this is what I'm always looking at, guys. The metric that I always look at when I sell a put is I'm always looking at this implied volatility. So I'm looking at options change. Sometimes if y'all see me perusing these options change, I'm just seeing if there's a spike in implied volatility. And I already saw that for June the 21st, there's a spike in implied volatility. So that stands to reason that they're paying a little bit more premium for that particular.
oh, you're right. So I think the June metrics probably come out June 20th. So you're right. So that's actually that might be the reason on Robinhood in particular, the implied volatility is higher.
So you see, like here for an extra week, you can go 17 and you're picking up almost the same premium, right?
Yeah, you're right.
Or you can go 18, which is exciting. But it's the volatility is about the same. There's not really a difference that I'm seeing here. So this was the one that we looked at originally, 1750. So now you see now it's already at 40.
40. Yeah, it's not that attractive, dude. It's not as I don't want to do 18 either. So
Yeah,
leave it. Yeah.
that's so that I'm saying, but those are the things, right? So
Yeah.
what you can do is you can place the trade and put the price that you're willing to pay to get paid for it,
Right.
and it has all day to hit it, and if it does, it does. If it doesn't, it doesn't.
Correct.
So that's something that we could do, right? Because we already know that like 55 cents or whatever was pretty attractive at the time.
Correct.
And then you go from there, and who knows, the spread might be pretty big. So you go 20. Here we go. So we can go 25 contracts, and we'll be like, let's just try to get 50 cents. I mean, will they give us 50 cents? Not right now, but they may later if there's a little bit of a dip, because this is what I do know about Fridays. They tend to sell off towards the
Yeah,
dip,
that's fair.
because the day traders want to get back into cash. And don't kid yourself. There's a lot of people day trading Robinhood right now, because this is a day trader's wet dream right now.
Yep.
So there's that. I mean,
you want to put in 55 and let it rest, because if it does sell off towards the end of the day, you get a little bit more.
You can, but I know that 50 is a lot more than zero.
Okay, let's do 50.
That's just 55, but it's a lot more than zero, right? So there's that. So you see, we're already, dude, I think we just do it right here, Amit. We're not going to walk over dollars to pick up dimes. You follow me?
That's fair.
And let's see if we can get it filled. There it is.
There we go. So let's do the math real quick for everybody. We just collected in premium 25 contracts times $52, $1,300 divided by 43,750, which is a hold on. We did 17.5 times 2,500. Yeah, 43,750. 1,300 divided by 43,750 is 2.9% return.
And this, what was the day? 5/31, right? Was that the one?
No, 14, June 14th.
6/14.
Yep.
It's right here. Okay, cool. So 6/14.
We'll talk about Shopify next, guys. Let me answer a couple questions here. So buy low, sell high says 6 days. I'm up 80% on hood calls. Do I let it run? What is the expiration and strike on that? I would like to know that on that question. And then someone says, oh, when is Robinhood coming in Germany? So yes, they only have the crypto app right now in Europe. The stock market app, I think, is going to take a while, because Europe is very tough with the regulations. So I wouldn't expect the actual stock market app to come this year. But right now, yeah, you guys do have crypto.
So here's a teaching moment for you guys. This is whenever you're selling against the current versus selling with the current, this is the difference in premiums, and it's pretty damn drastic. On 5/10, we sold puts for $15.50, 20 contracts, and we collected 53 cents in premium. Same expiration date. Here, a week later, we sell the same expiration date, but at 1750, 25 contracts, and we're only collecting 52 cents in premium or $52 a contract. So we have 2 open positions in Robinhood right now, but one we had to average up on because we're not going to get that same premium right now. So here's another thing that we can look at, Amit. We're going to show people some stuff today. So now we have another contract that is open on Robinhood.
Oh yeah, I forgot about this one.
That's at 1550 that we're already doing real well.
Oh, we got to close that and capture some premium.
What we could do is can we look at potentially rolling it up?
Okay.
I don't know. And like, in other words, increasing our strike price, catching more premium, or do we just want to take the risk off the table? Because it's still quite a bit of money.
How much collateral do we free up on this? 20 times.
Well, it'd be $1,550 times 20 contracts.
Yeah, 31 grand. 31 grand. Yep.
Yeah. So are you going to tie up 31 grand to make 280? Because there's a lot of time left on this contract.
That's correct.
We already know what the answer is, dude. You already captured 73% in 7 days.
100%. 100% agreed. Yeah.
I don't even have to know math, but I just know common sense tells me we're out of here, bro. Like, you know what I'm saying? Like, it was good. Take her number. Maybe you'll call her back. Maybe you won't. You know what I'm saying? So that's the reality. This is 20 contracts. So we got to close this bad boy out and realize yet more wins. But we don't want to give all 15 cents back. Let's see, we can only give 14. And we'll free up 31 grand in collateral. And there it is. It'll fill. There it is,
dude. That's cool, dude. When you get a contract filled and you collect the premium, are you just like
are you asking me if it moves a little bit? Is that what you're saying?
I mean, yeah, pretty much.
It's exciting. I mean, it's exciting.
I mean, you've done this a trillion times at this point, but still.
Yeah, it still does something to you a little bit.
It's making money in the markets in a way that a lot of people don't understand how to, which is selling options versus buying options. And hopefully this podcast series, guys, is demystifying this stuff and making it less scary, because I was scared as well. I remember TJ told me 2 years ago, he's like, you got a couple thousand shares of Palantir, you should be making some money off of it. And
so now, Amit, let's go back to this $4,000 comment, right? I don't let shit slide, guys. So now we're in this. I'm just saying, dude, because I don't like, dude. Numbers don't lie, people do, right? So we've been in this deal here with trying to buy Robinhood since 426. Fast forward 3 weeks later, this brings us to today to 517, and we've entered into all of these contracts. Here's the receipt.
You got to share your screen.
Okay, here's the receipts, right? This is the wheel tracker, and I'll show it on the actual brokerage in a second. But we have all of these contracts that we entered into: 426, 57, 59, 59, 510, 517. We don't own any shares. We've had to utilize, about $70, $75, $80,000 in collateral to get here. So keep that context as well. But this is how much premium we've received so far, Amit: $4,135. But we don't own any shares.
Correct. And this is what you told me years ago. It's like, hey, if you have shares, there is a way to make money off of it. And I didn't really understand it. I was kind of scared of what you were saying. But if you take some time to do research, it demystifies some of the fears around this stuff.
So my whole thing is this: we've been jacking with Robinhood for 3 weeks. We've collected $41.35 in premium. We've realized all of this money right here: the 790, the 330, the 700, the 235, the 780. Those are realized profits. This isn't monopoly money. These are realized profits, and we have an outstanding balance of 1,300, which is our latest trade. My whole thing is, if this turns into 40 grand, not to set you off, but just to drive the point home. If this turns into 40 grand, Amit, and we never own one freaking share of Robinhood, I don't give a shit.
Yeah.
Because at the end of the day, the last time I checked, money's money. You know what I mean? So it's like, are you enamored with owning a certain stock so that when you go golfing with your buddies, you're able to talk about it? Or are you enamored with making money? I fell in love with making money about 4 years ago, and my life totally changed. I'm not in love with the SoFi's, contrary to what people think. I'm not in love with Robinhood. I'm in love with the opportunity that they present me to make money.
Mm-hmm.
Because at the end of the day, that's what we're trying to grow. We're all here trying to grow our net worth. Maybe there's 10% of the portfolio of the audience here that's just trying to kill time. They're going to realize that one day the time killed them. You follow me? We're not doing that here. We're trying to make money. We're trying to look for opportunities to make money. And that was an opportunity there. And now we have a chance to continue to try to build a position in Robinhood at a price that makes sense to us. And $17.50, everything that we know about Robinhood right now, I'd say that it's a pretty fair entry point.
Well, Bank of America today says the thing should be worth $24. And that's, and that you don't always got to use the analyst, but Bank of America is a fucking big bank to upgrade Robinhood from 14 to 24. So I think that's also signal today as well.
Yeah, no, agreed. So then now we'll just follow this trade, guys, and we'll see what happens. And now you'll see it here. We have this Hood trade that we're down a little bit on. What's the best case scenario for me? What am I shooting for? I hope Hood tanks and we can sell another 25 contracts at $17.50. And instead of $53 a contract, we're picking up like $75 a contract, which brings me to the next stock of the day, and that's Shopify. We've got $58 puts.
Real quick, TJ, before you keep going, guys, if you're getting any value from this at all, thank you all for being here. I'm putting TJ's YouTube in the description or in the chat. He's the one who taught me how to do all of this. I'm sure he's teaching a lot of people here as well. So please make sure to give him a subscribe if you are not following him right now, and you'll get some good value from him. All right, TJ, go ahead.
Yeah, because you guys aren't going to get this kind of transparency anywhere. I don't give a shit if it's my nephew Henry. I don't call him Uncle Henry because I make a lot more money and he's younger than me. So I'm just saying, so little nephew Henry ain't going to give this to you because he doesn't have that kind of stomach. He's a lot more conservative. Hell of a wheeler, by the way. Shout out to him. Hell of a wheeler, but I'll never call him Uncle Henry. He's like 20 years my junior. You follow me? But anyway, so that's the thing. So now let's talk about Shopify. Let's talk about a trade that's kind of gone against us a bit, and now it presents an opportunity to test the courage of the conviction a little bit. So what's going on with this Shopify trade? Let's read the scoreboard a minute. Talk to me.
Okay, so to give context, we did get into Shopify before earnings at a $65 put strike price. We closed it a day before earnings because we were up, I think, like 60%.
Right.
And then we got into a new one. The new one is $58 strikes, and Shopify currently.
So here's the entire history right here as you're talking. Go ahead.
Yeah, so we got in at $65 put back on May 10th. They had earnings, I think, a day after, and we collected $1,200 in premium, and we ended up closing that because we were up a lot, and Shopify was like $75 right before earnings. And then we got into a new one, which were $58 strikes, $59 strikes, $60 strikes, and another $59 strikes, all for today. A lot of these are expiring today, actually.
Let me get.
And this 58, 59, 57, these are 20% below what the strike was back then. But what do you know? Shopify falls 20% on earnings.
Right. So essentially we have contracts. We have an agreement to buy 2,000 shares of Shopify. Just to read the scoreboard real quickly. We have an agreement to buy 2,000 shares of Shopify on 5/24 for $58. They paid us $52 per contract for doing so. And now the current price, the going rate of the contract is $1.10. So we wanted to take our ball and go home. We would have to surrender $1,140 on top of the premiums that they paid us if we want to free up our collateral. In other words, if we want to renege on the contract, right?
Correct.
We don't want to do that because we're bullish on Shopify. So now the question becomes, Amit, do we want to add more contracts here so that instead of having an average credit of 52 cents, if we add another 20 contracts, now we'd have an average credit of 80 cents or something like that, because the going rate's $1.12.
Well, so we said, what's the strike on this again? 58?
58, yeah. So it's right there.
So by next week, we're assuming this thing is above 58. Right now we're at 57.89?
Yeah, but we can always roll it a couple of weeks or a month.
So here's my question. Do we double down then roll, or do we roll today?
No, I would double down because we're getting the money right now, and then let it play out. Because why lock yourself into a longer term contract when right now the risk of early assignment is minimal because we have we don't have we have 14 cents of intrinsic value, 12 cents of intrinsic value, and we have $1 of extrinsic value. So the person on the other side isn't going to sacrifice $1 to put these shares on us right now when they're only selling 10 cents below our strike price. Like they would have to be mathematically retarded.
Right. Correct.
So you got to understand the math. Like there's a lot of strategy going, behind what we're doing here right now. So I'm comfortable adding 5, 10, 15, 20 contracts to this because I like Shopify at 58. I've been studying it a little bit more. I wanted to talk to you about Shopify.
Yeah, I heard yesterday on Finance Junkies, you've been deep diving into this one. So the only reason
costing me about 10 minutes a day of my life, bro, because Shopify, guys, is very compelling. Let me tell you what I love about it. I love that the revenue is growing year over year. It's not growing as fast as it once was because when companies get bigger, even though the growth is great, I mean, it's harder to double $1 million than it is to double 100. Just mathematically, because takes a lot more customers, etc. So these guys started making a lot of revenue, and now they have a lot of free cash flow. Those are the things that I like, and I love their balance sheet. They got like $3 or $4 billion on the balance sheet, and they only got about $1 billion and some change of debt. I like that they can stroke a check and be debt free. That's what I love about them fundamentally. This is what I don't like about them. Their share-based compensation is it's up there with Square. It is absurd. It's like 50% of their free cash flow. That's what I don't like about it. And I also don't like that they had like a $250 million boo-boo about a year ago or whatever, and it takes a while for companies to recover from that from an investor sentiment perspective, because now maybe they don't trust management so much. What was it, an acquisition? Like I still can't put
they were trying to compete with Amazon and do 2-day delivery, and they spent like $2.8 billion on it, and it's not really going that well.
So I'm just saying
this is the stock-based comp.
I want them to stay in their lane.
Yeah, this is the stock-based comp, not going in the right direction. I mean, it was at 158. Now it's at 615. Let's just look at their revenue real quick. Their revenue in 2023, look at that. Revenue was 7.6 billion, 615 million was stock-based comp. So, I mean, as a percentage, 615 divided by 7, that's closer to about 8%. I mean, that's still a decent amount of money. There's 18% on that, which is not the best. You're right about that. It's not the best.
So those are the things that I've been digging into, and then also the other thing that I absolutely hate about the stock is the valuation is a little bit frothy still. The more that I dig in, if we go to let me see if I can pull. I have alpha spread. Let me see what alpha spread has to say about these real quickly. So,
and again, guys, the only reason we're thinking of doubling down on this, as TJ said, and that's why he's spending 10 minutes a day researching, is because we're losing on the trade right now, not by a lot, but we're losing. Do we want to actually own Shopify if Shopify goes down to $50? And the only way you're comfortable on that is if you've done the research, and then you get paid to collect the premium up front by doubling down, but you only can double down if you genuinely believe there is a thesis on Shopify.
Right. So like that's alpha spread right there. It's a really, really handy source. And it does, DCF valuations and stuff. And this is another thing that just scares me a little bit. This stock has always, there's persistent overvaluation. Their intrinsic value calculation showing it at $23. I've talked to other hedge fund managers and they're like, dude, it's not on their radar until $45.
Yes, I've heard the same thing. Yep.
So that is, dude, I'm just saying, I'm like, okay, what do these guys know that I don't know? Because I got super excited when it hit 60. Like legit, I almost bought 5,000 shares without even telling you, because I'm like real quick to pull the trigger. So going back to the whole Robinhood thing, because I've gotten burned bag holding shares prematurely, a la SoFi at $12.50. To the tune of about like 50,000 shares at the time. you learn some things, right? And you learn that valuations matter. And if stocks are priced to perfection, the minute that there's a correction in the macros or the S&P starts going down, these things, they're like leverage plays on that. They go up fast and they go down even faster. So
Correct.
I just don't want to start bag holding too much either.
Two things on this. First, David, thank you for the $50 super chat. It really means a lot. $50 is a lot of money. TJ, we're gonna use this and get some.
He has a thing right here where he talks about how he used to be in real estate. If you want to go up a little bit.
Yeah, I saw that comment. So David said, I used to be in real estate until I saw TJ explain the wheel. Started a year ago, selling all my real estate and wheeling with the capital. Much love. Thank you guys. What do you think about that, TJ?
I feel like there's a lot of responsibility there. I wanted to text them my phone number. If you ever get in a situation, bro, like reach out because I'm here for you, because it wasn't all whistle and Dixie for me, dude. Like I was down a lot of money trying to learn. Like I paid a lot of tuition, learning how to do it. And now it's like, I feel like I'm stealing money, so to speak. But just make sure that you're dealing with high conviction stocks.
Yeah, and also, David, you can email me at amit@dailypalantir.com if you want to talk to TJ for that. So definitely email me. Okay, now here's my question, TJ. So the hedge fund guys are saying Shopify is $45. I see a lot of people on Twitter saying Shopify deserves to not even be at 59, right? 40, another 20% drop. Mm-hmm. But from a wheeling perspective, the premiums are great because the sucker fell 20%. So how do you reconcile? You can bring up the Robinhood portfolio again. How do you reconcile a stock that fell dramatically, which increases the premium, so it's an attractive entry, with the fundamentals, quote unquote, of the analyst community saying this thing's got more room to go down?
So I want you to put this comment up here, 25-25-50 strategy. This is gold. This is going to be an entire chapter in the book that I'm writing. Whenever I start a position, so we'll go here with Shopify, right? When we start a position, the very first thing that I have to do is I have to decide ultimately how much money I want to allocate to this position. So that becomes 100% of the pie, right? So then now I break it into 3 bullets. I break it into a 25% bullet, meaning 25% of the total capital allocation for this position is going to be on the first entry point. And then I'm going to assume that it's going to go against me. And then I'm going to allocate another 25% to that next area, if you will, that next buy zone. And then I'm going to have my 50% locked and loaded, which in this case is going to be that $40 range. So I have price targets and I have capital allocation. So here I wanted to get a total of about $250,000 to $300,000. That's the 100% of Shopify. So I already know that's how much Shopify I would like to own at the right prices. So at these levels here, I'm willing to own about $75,000. And then if it goes down to like 50, I'm willing to own another $75,000. And if it goes crazy to this $40 range that they're talking about, that's when I want to pick up a couple $100,000, and I can manufacture that $50 entry point, and I can live with that because the premiums are so juicy that you sell a few rounds of covered calls, you're going to be right there in the $40 range anyway. And if go ahead.
You start with assuming you're going to lose the trade, and then you work backwards.
Doesn't everybody feel that way? Like, did I feel like the minute that I press buy on a stock, it goes down? It's almost like intentional. Like I feel like the stock market guards do not like me because I don't go to church on their desired day, right? Like they don't like me. I go buy. You want me to tank Robinhood? Let me go buy 1 share. So I feel like the stocks are out to get me. So I'm gonna put together a game plan that says you think you're getting me. You're the one that's getting got, right? So I'm willing to dance with you in this $58-ish range, and I'm willing to dance with you a little heavier in this high 40s range, and then in the low 40 range, or if it goes in the 30s, like some people think. I don't think it's going there because their growth is too strong.
Also, the management. I mean, I don't know if you guys have seen Harley Finkelstein or Toby Luke talk. These guys know these guys aren't fucking around. I mean, their Black Friday sales were up 22% year over year. We're talking about tens of billions of dollars on top of the previous year's numbers because Shopify is a go-to platform. It's just the valuation's not the best. And so getting down to 30, 40 bucks, I mean, it could happen, but I think the market would have to fall with it for a company like Shopify to get that bad.
Yeah, but the thing is it's about the growth, right? Like, I mean, their growth was
24% year over year. Yeah.
The revenue. Yeah, but now they've guided for like 17 to 19.
Yes. Yes. Yeah.
So it's kind of like what happened at Palantir when they had to retract from the CAGR is going to be 30% year over year. And then they were like, what was the low? I mean, you follow this company, it was like 14% or something like that. Like, I know that it wasn't 30, it's still not 30, but now they have a legitimate game plan on how to get there. So if you're gonna pay premiums, because it's the present value of all future cash flows, that's what we're paying for in an investment, right? The everything money guy talks about it all the time. You got to decide what's a fair price to pay, because you're assuming a certain level of growth. But then now whenever the company says, hey, the growth isn't going to be as high as we thought, it's going to get repriced, bro. It's going to get repriced. It's just like, that's kind of what's going on with Tesla right now. The margins compressed, and now they're not selling as many cars either, right? So it's like a double whammy with Tesla. So anyway, Mitt's over here doing selfies. I don't know what's going on.
I'm taking a picture of this whole
setup. What's going on here?
I was taking a picture of this whole setup because you're saying gold. I want to capture the moment, so I want to take a picture of this.
So anyway, so I've already decided that, like, I'm willing to throw a first bullet here. I don't think it's the bottom, but at the same time, I don't want to get into too many of these Robinhood scenarios where, guys, if you want to make big money, you have to be willing to own shares at some point. Yep. Let's say that again slowly for the people in the back of the class. If you want to make big money, you have to be willing to own shares at some point. So what I'm saying is I want to own shares of Shopify and I want to own shares of Robinhood, but I also want to own them at reasonable valuations. And I think the 1750 range with Robinhood, that's a reasonable valuation for me. Or let me collect 5-6 more rounds of premium, and then I'll increase that price target to 1850, 19, maybe even as high as 21 day. Because I don't care if my average cost on paper is high, if I've got a lot of cash secured put premiums along the way before I even got those shares to help me out with my adjusted cost basis overall. But I'm telling you, dude, Shopify, it was overpriced at the $70 range when we first started. Now it's getting more attractive. It's going to be really, really attractive in the $50 range. So I don't think we have to hurry here to buy more shares, but I would like to increase the position sizing with the understanding that we're going to roll down if necessary.
Right.
Like, in other words, let's make more money with Shopify and manage the trade later.
Right. Because if we double down on this and Shopify goes down, we'll just roll down and out.
Yeah, this isn't like, initially, before I did more homework, I thought that this was where I really wanted to own these shares. And I'm okay owning them. I'd much rather start the position at like $55.
Yeah.
If the market gives that to us. If it doesn't give it to us, we'll just keep making money with the puts. It's all good, dude. I mean, money's money, right?
That's correct.
But dude, I'm in the 40s. Oh boy, dude, she starts getting really, really attractive. I don't watch much of financial education, but they talked about him yesterday. So I found where he was talking about Shopify on his bit. It was like 2 stocks he was talking about. And I fast forwarded to part where he was talking about Shopify. And he was like, just want you to know right now, like Shopify's buy right here. Like, every dip opportunity is a buy or whatever. And he's got like 6 stocks that he touts on some public portfolio. And he's trying to make this number 7. And I wholeheartedly agreed with him on it, dude. I'm like, dude, that portfolio, that would look very good in your portfolio, but it would look better in mine.
Yeah, because again, Shopify, although the valuation's up there, it's a sleep well at night company, a swan, as you mentioned.
It really is.
People are not using Squarespace and Wix to sell things on the internet. It's Shopify and Amazon has ridiculous fees, which is why people use Shopify, and they have the best data analytics platform on the planet for e-commerce. So
I ordered some weight equipment yesterday, and through the checkout process, it took me to these guys somehow.
Yeah.
Somehow these guys were involved, and then I went back to buy more stuff because I was like, oh shit, I didn't buy enough weights. So I bought more weights, and then they're like, sent me a text message, make sure it's you, because I had done some express checkout stuff, because in case if I want to keep adding, I don't want to go through the process. Mm-hmm. And they sent me a text message, and boom, dude, it was seamless. And so like somehow they got part of that transaction that I did with PowerTech yesterday.
And from a macro perspective, is e-commerce slowing down, or are people going to shop more on the internet?
No, dude, I think
mean,
e-commerce, bro, I know it sounds crazy, but I think e-commerce is still in its infancy.
I agree. Amazon's only 5% of commerce worldwide. I agree.
And that's crazy to me because I still haven't graduated to e-commerce. My wife, dude, she does I think it's like a kick to her. She has like a shipping and receiving business, right? So it's like, 10 packages come in and 8 packages go out. And it's like a little routine that she's developed. So there's a lot of people like that like to do things. It's so convenient on the internet. I'm still a touch feel guy where I want to go in the store and waste my time doing that, but only 2 or 3 times a year. But she's like, I could have this shit come in day. And then eventually she builds her wardrobe the way that she wants it, which never happens. But she's got shit coming, dude. The shipping and receiving business is robust here at the house. So what do you think, dude? A lot of rambling.
Let's do another 20.
I want to sell more puts. How do you feel?
Let's do 20 and let's do 20 contracts, and I guess we'll see the strike that we like.
And again, we don't have to add to this particular contract. I mean,
okay.
These expire right over here. We can ladder this thing. Like this is where we're at right here. You can be more conservative over here, or we can go like over here to May 31st. You pick up $1 over here at 57. It's a little bit less risk, so we could do something like, that's a 38 delta. These are very high probabilities that we would get assigned these shares, right? If you will.
Right.
So we could do something like 20 contracts over here.
Which would be, guys, that would be 20 times 5,700. That would be 114 in collateral. And we're trying to get 2,000 on top of that, 2,100.
Yeah, and then how long is that trade? 14-day trade, so that's not bad.
That's a 2% return in 14 days. Yep.
Yeah, so you annualize that feels like about 50%.
Yeah.
So there's that. Or if you want to just keep it simple, it's one less position to manage. We just match the ones that we have here. Because we have some at 60 as well. Keep in mind that we're already babysitting. So we're already going to have to babysit this one at some point.
Yeah.
Because that one's pretty deep in the money, or we can just match these up right here and just add to this one, and then we'll roll the entire thing collectively, or we might be able to just free up all the capital if there's a little bit of spike with Shopify.
So I like the 57 one because there's only 11 cents extra we're getting on this. Does that make sense?
For a lot less risk, right?
Yeah.
No, I hear you. I mean, that's the thing. So it's all about risk management at the end of the day. So we go over here, we ladder into this thing, and we go right here. I think this is the one we were looking at.
Fife was just 310. Good. I got to get your take on the meme stocks, TJ, after this. I want to know your thing. Wow, it's at $3. It's crazy. Most of that action hopefully is happening on Robinhood. So there you go. All right, we're doing it for $1.02.
Nothing yet. We'll let it stew. So we can lower it here in a little bit to try to get it filled in a second. But anyway, let's talk about another. Oh, it just filled. Okay, so $1.02, and it was for what?
For 114 in collateral, 20 times 102. So we picked up 2,040 divided by 114,000, which is a 1.8% return for 2 weeks or 3 weeks, I think.
And it was
57, yeah.
Oh, this guy right here, right?
Yep.
Okay, this guy got annotated on the thing. So 531, 102. Got it. So go over here real quickly. You always want to keep books, guys, because the numbers won't lie and they'll keep you honest. So we'll go 517. You go sell put. If you guys want access to this tracker, it's a WD shirt 777 at gmail.com. Doesn't cost you a dime.
Or you can just email Amit at Daily Palantir and I'll get you.
There we go. And then it's 57, right? And it's 20 contracts, and it was $1.02. So there's that, and open. We'll go here, boom, and then we can look at the state of the affairs there. So now we have 176,000 that's in the money. We've got that 114 that's out of the money. So we have a pretty big allocation there.
Let me add that 60 plus 116 plus 114. So out of my 500, 290 is gone to Shopify.
It's right here. It tells you right here.
Oh.
290.
So, and we closed all the hood positions. So the only other
No,
thing
we have 43,
oh, sorry.
750 on hood. We have 290 on Shopify, and we have that 70,000 on TSO that I haven't talked about yet. We'll get to it in a second. It's just there's a lot to unpack because as the positions get bigger, there's more to deal with, right?
So 403 grand.
Yeah, but if you look at the tracker, here and we go to Shopify, don't own any shares, admit, but we've already picked up $6,455 in premium.
Yep.
So that is our margin of safety right now.
Yeah.
And we're going to have to manage these positions. This is exciting because whenever we manage, we're going to be trying to roll the way that we did with TSL that one time. We're going to roll down and out, and we're going to start trying to get to acquisition price targets. These are closer to acquisition price targets than this one. But the beautiful thing about it is because we were smart with the risk management, these positions are bigger than the 58s and the 57s are bigger than the 61. So collectively, we're still going to be in the 50s if we were to take ownership of everything.
Correct.
And I feel like I can manufacture the win. And that's 290. So we're approaching the amount of money that I want to allocate to Shopify. So now we just got to be smart about it. We don't want to buy it too soon because then we could be bag holding and you're very directional at that point, and now you just find yourself selling a bunch of covered calls because you don't have any more money to sell cash secured puts because you own a bunch of stock over here.
Right.
So that's the thing. Are we good? Learning anything today?
We're good. Let's go to TSLL, but
last one real quickly. I sold these yesterday. Probably going to get it wrong for us, but that's okay. I sold them yesterday, expiring on 5/31, $7, 100 contract, picked up $2,700. We'd already locked in a win previously on TSLL.
And for those that don't know, this is a leveraged fund on Tesla. It's 2x leveraged on Tesla.
2x leverage on Tesla. Yes. So I just think that even if it goes to like 6 or whatever, we'll manage it. But I do definitely have a price target of $6, dude. If we can own 100 or 10,000 shares of TSO at 6, I want to ride those up to like $7 or $8 because then we can start making bigger money. Because owning shares and riding them up is going to be more lucrative than selling cash secured puts over and over. But you're also going to have to assume a little bit more risk. And TSLL also comes with a little bit of a dividend. So there's there to endure a little bit of pain. And I like it at 6. At 7 is what the market's giving us right now to keep because do the math on that one, Amit, that's pretty crazy, right?
Yeah.
Picking up 27 hundo on 70 grand. But that's because TSLL is a hell of a lot more risky than Hood at those levels and then possibly even Shopify. So everything's commensurate, right?
Correct.
We're good?
I think we're good. It's this was a long episode. I hope you guys got a lot of value out of this one. So the 3 plays that I'm allocating from TJ's money is Shopify, Robinhood, and TSLL. And in the coming weeks, we will see how those play out. And we've already collected some premium.
Yeah, and then end phase, I've got, we'll just end y'all with this because this is my ATM on covered calls with end phase. This one expires today, and you guys can
$40,000.
That's how.
Why don't you close it right now? Close it live, 97% up.
Because it's only a 0.7 delta, so there's a 93% chance I don't have to give back that 880, bro. And 880 is a lot of money, and it's also. See, this is where it changes. This is a good little teaching segment for you guys, and I got to go. I don't care if this thing gets challenged because I'll just roll it up and collect another 25 grand, and then I'll go from a 120 strike to a 125 strike.
Correct.
And I'm cool with that. So it's like, you're going to have to take this 880 from me. I ain't going to relinquish it right now, especially if I just wait till like 12 or 1, I'm going to pick up more of this data. And if I close it out for like 200, I'll give it to you. You know what I mean? But yeah. I'm not going to give you 880. And now I just look at, okay, well, how much money can I get for rolling this bad boy a couple weeks? So I'll go over here to May 31st, and I want to go to 125 strike. That's the goal. I'm not quite picking up what I was looking for because I'm looking for $20,000 every 2 weeks. Right now, I'm only getting $16,280. So my goal is or the hope is that end phase goes to like 118 or so. And then that'll put me in a position where I can look forward to another $20,000 bill. But it's even better for me because now I go from a 120 strike to a 125 strike. So there's $5 more of capital appreciation. Because if I keep it at 120, the way that it is, look how insane that premium is right there, dude.
Wow.
32.5.
I mean, someone's willing to pay that money, $3.05 per contract.
It's insane, bro. Like, God bless them.
But people are really bullish that Enphase cracks 120 around the next couple of weeks, basically.
Yeah, dude. And look at the delta. The delta is 41. It's just insane, dude. That's why I'm trying to get to a 125 because that delta is 25. That's more in my safe space, if you will. And also because I own these shares at 139.74 or whatever it is. So I'm getting a little bit closer to my break even on the actual average cost.
Correct.
So it's
real quick. Could we see your SoFi? What's going on with SoFi? How are you philosophically thinking of that one?
I haven't even looked at SoFi today. It looks like it's
up. It's up today, which is nice.
Oh, good for them. So what do we got here? So we got 150,300 shares at 792. So down on the shares. Then I got 5 strategies, 810,000 in collateral.
For what? For what? That's puts?
Yeah, cash secure puts is 810. And then I've got the shares up for sale, 140,300 of them are for sale. So I've got $8 calls expiring on 5/31. Then I've got, this is all for January of 2025 on the puts. I've got 400 puts at $8, 700 puts at $7. And then I've got the leaps that I bought. I bought $10 leaps for January of 2026, 200 of those. And I bought $107 leaps for January of 2026. And periodically I sell covered calls against these as well to lower my output here on the money that I paid for the leaps. So that's what's going on with SoFi, man. Just a lot of wait and see right now. We're just trying to make money here with the covered calls. And the reason that I'm willing to be very aggressive with these is because I have these leaps that are protecting me over here. Right. Like if these were to get out of hand and if I were to relinquish my shares, I would still be making a lot of money on these leaps. And then I reserve the right to buy these shares all over again at $7 and $10 down the road. And I'm looking at another 100 contracts here at $7 as well. So that, and that's what I want to rock with. And this is more capital efficient than just buying a bunch of shares. And that's how I'm playing it, dude, in a nutshell. So if it goes to $8, I'll be happy. I'll be happy because that means that we've erased this $83,000. And then now the next round of covered calls, I'm going to collect a lot more money because this one wasn't very lucrative. Only picked up 9 cents a share, 10 cents.
Yeah, I've noticed. Have you noticed, TJ? I'm looking at the premiums on SoFi. I was looking at it yesterday, and they've turned really bad. Like, they're not good.
There's no upward momentum with the stock. I mean, this is all the premium that I got, dude. On all that batch, I got $15,012.
Yeah.
And to qualify for only 8 cents of capital appreciation, right? Because I own them at 792. So that's why I'm being very, very aggressive with the covered calls, and the leaps that I bought allow me to do so because they're like my protection, if you will. Because I have that insurance policy that I paid for. So I feel like we covered all of it, man. We've gone longer than I wanted to. I hope
this was good. Again, TJ's YouTube is in the description. I'll put in the chat again. Please make sure to follow him, guys. This was awesome. TJ, we're going to do word of the day. And then, guys, I'll stay on a little longer after this. I'm just going to go pee real quick after we do word of the day.
The squeeze, guys. People are talking about the squeeze. There's about 50 million shares that are going to come off the books next week. Because SoFi had to be above a certain level today, and if not, those shares are going to get taken off the market. So, but I don't know if 50 million shares is going to move the needle or not. This is just higher level technical stuff that maybe people don't talk about on YouTube.
Yeah, but also the apes and the meme, they don't think of SoFi as like something they're going to.
No, SoFi's now in the top 5.
In short interest
of the Wall Street, dude. There's have you looked at their short interest?
Well, no, I know it's 19%, but no one cares.
Dude, it's way higher than that.
No, it's 19%.
Are you sure?
Well, I'm looking at data from 2 weeks ago, so maybe I'm wrong on that.
No, dude, Felix just did a video yesterday. It was like at 34%.
Holy shit!
According to Felix.
Are you really?
Yeah. I didn't verify this info because I trust him. I don't know if y'all know. You know who Felix is?
Yeah, I know Felix.
With the dog, dude. I don't know. He's got a cool dog named Winston.
Well, if that's the case, if that's the case, we need these fucking apes.
And 50 million shares are coming off the market. If SoFi is not above like 896 today, 50
Dude,
million
get
shares
these
are off the
apes.
float.
They got to get excited to squeeze the hedges on this bank.
But the issue with SoFi is right here.
I'll talk about all the stocks that are running, guys, after
Yeah,
TJ leaves. We'll talk about it in a second.
That's the issue with SoFi. The float is right.
Oh, yeah.
here.
It's 1 billion shares. Yeah. It's a lot.
So it's hard to move.
And then with Palantir, everyone's like, oh, short squeeze them. I'm like, Palantir, dude, like they're 2 billion shares. We're not going to squeeze anything, you know?
Anyway, I got to get rocking. You want to do the quote of the day?
Word of the day. Okay. Word of the day is illimitable.
Mm-hmm.
Illimitable. Incapable of being limited, limitless, or boundless. What do you think about that one?
Shopping addiction is illimitable.
You know my name, Amit? It actually means infinite.
Does it really?
It
How cool is that?
Yeah. So there you go.
How cool is that? Well, I wish I had something cool like that going on in my life, but I'm.
You have something really cool. You just press a couple buttons and you collect thousands of dollars every single day, which is really cool.
It's my hope that I impact a handful of people on here, dude. This isn't just to go out here and flex. I want to make an impact, Amit. I want to help people to know that there's a way that you can go out there and make your money make you money.
That is correct.
You know, like you work, we all work for money. We all know how to do that. Dude, we're conditioned by this country to go out there and be employees. And I'm telling you here, there's a hack out there, but you got to put in some work. It's not a lottery ticket or anything. There's work involved. But I mean, we're talking about researching stocks and stuff. I mean, come on, we're not out there in the hot sun working the fields. You know what I mean? So let's keep it in perspective.
I love it.
Let's keep it in perspective. I gotta get rocking and rolling in a minute. Much love, dude. I appreciate you, man. Shopify, dude. Even if we go down on it temporarily, dude, I'm in it to win it on Shopify. I like it, and I love Hood. We just got to be patient with this thing, dude. We'll just keep collecting some premiums. And at some point, it just becomes no-brainer stuff. And we're like, hey, we got to own these shares because it feels like a gift from the stock gods.
I agree. Thank you, TJ. I hope you guys got a lot of value. Is YouTube in the description. I'll see you next week, TJ. Thank you.
Appreciate you guys. Take care.
All right, guys. Yes, I know the market's going up. Robinhood just passed $20. This Fife thing is up 104%. I am going to squeeze my bladder. So I'm going to play a video and go take a piss, and then we'll come back and we'll keep going deeper into what's going on in the market. So here's a video right now. Sanctuary Wealth's Mary Ann on the market continuing to go higher. I'll be back in like 2 minutes. All right.
The Dow briefly crossing the 40,000 level for the first time ever yesterday before pulling back to close the session lower. Right now, we want to bring in Mary Ann Bartels. She's the chief investment strategist at Sanctuary Wealth. And Mary Ann, this is weird. We're in May and nobody's selling and going away. Markets are all at new highs or just below them. And the question is, does this momentum beget more momentum?
Well, the answer briefly is absolutely yes. And we've been in the camp that you didn't want to sell in May. Maybe want to buy in May and sell before Labor Day, where in September and October you get a lot of volatility. But we think the momentum will continue and that indices in our market and actually globally are going to continue to hit record all-time highs. And what's telling us that is the breadth of the market also reached a record all-time high, confirming these new highs in the market. And you've got fundamental support. Earnings are coming in better than expected. Profit margins didn't collapse. They've actually stabilized and improved. And it's even possible that we get a rate cut before the election.
All right, we are back. Maybe we do get a rate cut before the election. Let's get into these stocks. Faraday future up 106%. Robinhood currently is at $20.13. We're getting a bit of a breakout right there, up 12% on the day. Again, for those that didn't know what happened, we got a Bank of America news update today, or an upgrade, basically saying, hey, we think this thing is ridiculously undervalued. They are executing on all levels, and they deserve a premium. And so that's why the market's rewarding them. They're up 12.6%. I mean, look, their earnings were incredible. We knew their April numbers were incredible. So one could argue that the stuck in the 17, 18s for a while. That was just, getting ready to gear up. And now it is officially breaking out and it's above this $20 range as people are starting to recognize. And now the psychology comes in. Wait a second. If all this meme stock shit is happening and it's happening on Robinhood, then why don't we own the picks and shovels? Why are we focusing on the memes that are here one day, gone tomorrow? There's this one thing that controls all of it. On top of that, Bitcoin, $67,000 on the day. We haven't seen Bitcoin 67,000 since, we haven't seen this level since April 23rd. So it's been basically 3 weeks since then, a little bit more than 3 weeks. We've been waiting for this, just under a month of getting back to these levels at Bitcoin. We saw the dip right here, 56,000. Now it's 67,000. So that also is another catalyst for Robinhood. Again, the catalyst for Robinhood, the meme stocks that came out of nowhere, then Bitcoin. Robinhood, we know how much money they've been able to make off Bitcoin based on the price action we saw in the month of March when they did $23 billion of trading volumes. And then you've got the company executing $4.9 billion in deposits in the month of April. Faraday future is looking like it's trying to get to $4, $3.50. If you bought this morning at like 2:30, you are already up. If you bought at 6 cents, you are up a lot. The stock keeps running. Market cap now, 150 million. Market cap was like 9 million a couple days ago. Volume, 450 million shares have been traded. It looks like the squeeze on Faraday future is happening again. This stock was 94% short. So it's getting some momentum. We got Benny in the chat. I bought 100 shares of Fife at 250 today, amid out of pure FOMO. Well, it looks like the FOMO worked. And now you got some momentum. Oh, where's Reddit? Let's check out Reddit. Reddit. Wow, 12% up. They had the OpenAI partnership yesterday. And again, all these people are going to Wall Street Bets and they're scrolling through Reddit. They're making Reddit accounts to try to figure out what the hell's going on. So that's a big, big catalyst for Reddit and Robinhood. I think both of these companies are the picks and shovels of how a lot of this stuff is going down. Obviously, Robinhood is the platform where people buy this stuff, but Reddit is the platform where people go to get the information on what's actually happening. Same thing for Twitter. I think it's the catalyst for Twitter. A lot of people are probably signing up to Twitter right now and trying to figure out what's going on as well. And then you got Bitcoin at 67,000, which is gaining momentum here. GameStop is still down 26% on the day. So all of that money looks like it's either leaving GameStop or not really going into GameStop, and it's going to the Faraday futures of the world. CleanSpark's up 4%, MicroStrategy up about 9%, AMC down another 4%, and then Palantir up 2% of the day, trying to touch $22 as well. Let me know in the chat if you're in any of these stocks, whether it's the Robinhoods or it's the Faraday futures or the Reddits of the world, and what your kind of exit strategy or plan is on how you're navigating this. SoFi up 3.86% of the day as well. SoFi is at $7.40 on the day. Not bad. Not bad at all for SoFi. Seeing some momentum along with some of the other fintechs. I didn't know what TJ was talking about, that the short float is now 30%. I'm going to actually try to pull up that Felix video where he says that. Because that's interesting. If it's at 34%, I mean, it definitely makes them a candidate for a squeeze, dude. 18% is whatever, but 34% is a bit ridiculous here. Okay, so let's see a little bit of what he's talking about and see if there's any momentum there. Let's see. Let's listen to him for a second.
Those rules, otherwise GameStop wouldn't be basically shorted at 5 times the number of stocks that are out there, which means it's impossible to do that. But yeah, okay, in theory you need to borrow. So the borrowing rate tells you something about how shorted this thing is. To borrow SoFi costs 0.5%. That doesn't seem like a lot, does it? How much does GameStop cost to borrow? 22%, which is more like a credit card, right? So 22% is pretty hefty. So we haven't yet seen the frenzy. So the frenzy certainly isn't there yet from those kind of metrics. And how many shares can we borrow? Like if I wanted to short 1 million shares of SoFi today, could I? Well, yes, actually. There are 2.4 million SoFi shares available to short right now. How are they made available? Well, a lot of you lot with your Webull accounts and Robinhood accounts, you are making a little bit of money, aren't you, on lending out your shares? Well, you are the ones who are facilitating this. That's where it's going, to the hedge funds. So think about that. GameStop is, well, over the last day or so, it was often zero. You couldn't borrow any GameStop at all. And that shows you there is some madness going on there.
So his argument is that if you can borrow more shares on SoFi, that is leading to the potential for people to try to short it, which potentially could increase the short percentage, which then would lead to somewhat of a squeeze. Now, I don't know if the exact percentage is 34%. TJ said that's the case. I saw it was 18%, but in the past 2 weeks, my numbers are 2 weeks old. Those could have been updated, which means it could be short even further. Robinhood, $20.11. The short float on Robinhood as of 2 weeks ago is about 8%. So I don't think that's squeeze potential, but the shorts, if they cover, that just gives additional momentum to Robinhood as well. And that Bank of America report, if I'm a short and I read that, again, you got to ask yourself, really, do I really want to be short this thing? And maybe you just cover and get rid of it. And that helps out Robinhood as well. Faraday future up 120%, 364. I guess we'll see how much juice is left in this one to keep going. But this one, just exceptional, dude. 120% for the week. Faraday future is in the past 5 days up 7,800%. That's a lot. Over the past month, it's up 5,000%. Over the past 6 months, it's up 114% because it was at 170 in November 2023. Year to date, it is up 500%. So that's a lot. That's definitely a lot. And again, this is one of those things where it's like, how do you time this thing? What if this thing is going to $10, or what if it's going back to 30 cents? It's very hard to come to a conclusion around this. So, I mean, it's tough. Let me look at the puts on Faraday Future just to see, for my own opinion, what the pricing strategy is. So if I wanted to buy puts expiring in 2025 at 50 cents, these puts are 36 cents today. They're down 5%. I mean, see, I haven't even done enough research on Faraday Future to think I would be willing to like engage in puts, because I'm just like, I don't know. Is there actually a thesis here? Is there something that I haven't heard of? Do the apes on this one know a lot more than me? As ET says, are there strong fundamentals for Faraday, and writing puts on this or selling or buying puts is stupid? I don't know. Now, granted, my gut tells me this thing is a joke and it's being treated as a joke. But maybe the apes take it to another level. The other one you guys were looking at was Green Wave, right? Green Wave is up 43% on the day. And then that Crown Electric is up 60% on the day. Well, there you go. It's still down 90% year to date. Yeah, I mean, it's up year to date, but it's down 90% all time. I mean, this thing has gone through multiple reverse splits, a lot of stuff. Their cars don't even look that pretty, dude. I looked at the cars. I was like, these cars don't even look exciting. So maybe meme is the new strong fundamentals. And again, we talked about in the beginning of the market open, there is the memification happening, which is a investment thesis around capturing attention and then transforming that attention into monetary value. The question is, how much monetary value does the attention have to sustain itself? I think that's one of the broader things that's important to understand. Benny says, Amit, I keep seeing that apparently in 11 days, if FIFE is over $1, all the shorts will have to buy, which is going to make the stock moon. Oh, so maybe that's the thesis that the apes have. I keep calling them apes, but you guys know what I mean. Maybe they're saying, let's keep this thing over $1. And then in a week, the shorts are going to have to cover, because I think if you're under $1, you get delisted from the stock exchange. These guys were at 6 cents. So maybe they were very close to being delisted, and now they're above $1, and it protects you from being delisted, which means all the shorts who are betting on this thing to go to shit, they're going to have to buy back their shares, or they're going to have to cover, which potentially makes this thing even go higher. Look, that could happen. I'm not getting into this. If someone wants to get into this, you just have to, assess the risk for yourself. But if that does happen, this thing keeps going higher. I have zero FOMO, and I'm actually happy for this thing to keep going higher, because I have a bet that a lot of people are buying Faraday Future on Robinhood. And so I've made my bets. I think I understand where the momentum is happening. And if this thing goes to $10, $15, there's going to be so much volume in trading and so many new users coming to the one app that makes it actually easy to do this stuff, which is Robinhood. So, I mean, I'm a proponent of get this sucker to the moon. Let's keep this going. Robinhood right now, number 9 in the App Store on finance. And I believe on the top 100 apps or top 200 apps, it is number... Amit, did you buy calls? I did not buy calls. It is probably number 104 in the entire App Store. It's been in the entire App Store in the top 100 or the top 200 for the past couple of days, which is just, dude, that's a lot of growth. That's a lot of new people coming into the platform. So we will see. We will see. FLJ is taking off. What the hell is FLJ? That's another one. FLJ. Dude, what is this? It's up 100. What? Oh, dude, how are you guys finding all these freaking stocks that are mooning, dude? FLJ, Crown Electric, Faraday Future, Greenwave Technologies. This is insanity. The market cap on this is $6 million. What the hell does FLJ Group do? FLJ Group. It's up in the past 5 days, 200%. And people are just finding random stock. This feels like Wolf of Wall Street, dude. FLJ Group. I'm not buying FLJ either. I'm just looking at it, trying to understand what the heck these guys do. They're in China. They have 19 employees. What the fuck? What is this, dude? What is going on, bro? If I'm not wrong, this is the website. It's like meme coins, but in stocks. The fuck is this? The website doesn't even say what they do. What do they do? Corporate profile? This is ridiculous, dude. This is like insane. What is going on? Is a leading technology-driven long-term apartment rental platform in China? Are you kidding me? We know that real estate in China is going down the drain. There are literally thousands of buildings in Shanghai that are like 50 floors high that are empty. If you guys watched the 60 Minutes episode on China a couple weeks ago, I mean, it's bad in China. We are pumping a long-term apartment rental platform in China up 150%. This is insane, dude. This is insanity. This is great. And I don't think people are buying this thing on Schwab. I don't think they're buying it on Fidelity. I mean, probably Weeble's getting some action. I don't think they're buying it on SoFi. I don't even know if SoFi has this listed. They're buying this sucker on Robinhood, dude. That's where it's happening. Robinhood up 12.37% on the day. FLJ now is up 187%. It went up 20% since we brought it up. Faraday Future 125, Crown Electric 61, Greenwave 44% on the day. Oh boy, Chinese government buying homes. Yeah, but this thing is an apartment rental platform. I don't even know if the Chinese government buying homes would help this thing. They have to get people to rent, or they provide the technology for apartments that are renting out. When I rented an apartment, there's a company in America, I'm forgetting the name of them, but all the back end payments went through them. That seems like what FLJ is, but people have to be renting. And right now it doesn't seem like that's happening. And that's kind of the downside to this. And 50% of people of the middle class have their net worth, or part of their net worth, or a significant part of their net worth in real estate in China, not in equities. Like in America, I think more of it. Well, I think America is more of its real estate, but there's a decent amount of Americans that have it in the stock market. And I think it's at all-time highs ever since 2020. And that's good for American. That's good for companies. That's good for public earnings. That's good for American, consumers. But for China, their stock market's not really doing as well. Now, it's done better over the past couple of weeks ever since they made some changes. Alibaba, and I touched $90 today at $89.25. But in general, real estate is not doing the best in China. And so that's one thing at least to think about. AKAN is up 60. Dude, oh my God. So many of these things. Duo, another Chinese real estate company. Oh, so this is a trend. This isn't just FLJ. Look at Duo, up 370%. Wow. So people are trying to pump Chinese real estate as like the next go-to thing. Interesting. Very interesting. All right. That's what we're seeing right there. You make a good point, Amit. I got my hood shares. No need to mess with these get rich quick traps. Yeah, I mean, honestly, that's what's stopping a little bit of my FOMO as well. On top of the fact that I'm trying to become a more, educated investor and not like just gamble into this stuff. But especially because I don't have the money to gamble. If I had the money to gamble, yeah, I'd be gambling. But I don't have the money to gamble. So, what I think of with Robinhood right now, $19.99 is like, I think a lot of the action's happening here, and I think Bank of America said that as well today in their note. They're like, look, they literally said this is the real deal. We see upward momentum and acceleration from the rally, and they think this is happening. Here's the biggest part of the thing that they said. They said, hey, we think this is going on until 2026. And if they think this is going on until 2026, we see 44% organic growth, margin loan utilization, 60% year-over-year trading activity payment for order flow, and we expect this to continue through 2026. I mean, if that's the case, I don't think this is like a okay, Robinhood's here today, they're gone tomorrow. They've worked really damn hard to build the business to be for the long term. And if this is going to go on for the next 2 years, then, Bank of America sees $24 as relatively cheap given where this thing is going, or at least the price right now is relatively cheap given where Robinhood's going. Given Robinhood could go to $24. Amit, do you think these hedge funds are pumping in other stocks so that folks get off GME and AMC? It's a good thesis. I don't think hedge funds are getting into Chinese real estate penny stocks. I think this really is retail driven, quite frankly. I think the hedge funds are potentially manipulating GameStop, maybe like doing synthetic longs while also being a majority short and just kind of playing with the markets to get people to think GME is going to pump, but then they short it, all that stuff. Look at Bitcoin. Wow, 67,440. Bitcoin's doing phenomenal right now. And so from that perspective, I'm like, I don't think the hedge funds are messing with the penny stocks, but I do think retail is getting a lot more excited. And look, when people can make quick money and people can kind of recognize what's happening there, they jump in, especially if you've made money off the stock market this year and you have some excess disposable income you can gamble with. Yeah, people are going to take a gamble. People are going to take a gamble. I mean, people have a lot in the United States. People have made money this year. And if they realize any of those profits, if they want to make even more money by having fun, yeah, I think that's what's driving a lot of this. And I think that's actually okay. Whereas in 2021, the reason, we were at a top when this meme stock stuff was happening, S&P 528, was because there was no money. It was all government printed stimulus checks going into this stuff. There is money now. Unemployment has come down. Inflation has come down. People have money they made from profits. They might be throwing it into these gambles, but it doesn't seem like they're literally betting their net worth on it. Some people are, but I think a majority of people aren't, which is why it's not really a top, or it's why the markets aren't necessarily that afraid of all this liquidity in the system, because it's not that much liquidity. It's just people kind of messing around with their money. That's actually what Steve Quirk, chief brokerage officer of Robinhood, said yesterday. He's like, look, the people that are betting on DJT on our platform or AMC GameStop, they've made money on other stocks like Nvidia, Amazon, Meta, which are the top holdings on Robinhood, and they're taking a small gamble here with the other stocks. Robinhood, $20.15, up 12.58% on the day right now. All right. There we go. That's what we've got in the context of the market. Jesse says that's not true. Big dogs have stakes in a bunch of penny stocks bought back on March 31st. Maybe. I don't know exactly what their stakes are. I would tend to guess. I don't think they're betting on random Chinese real estate penny stocks. I don't think that's happening. But the GameStop and AMC, I agree with you. Maybe they are, manipulating in some capacity. There is an argument I was reading that, in early or late March, early April, a lot of these hedge funds bought call options on GameStop because they saw what was going to happen. And then it ended up happening, and maybe they've exited, at the top. And they did that through dark pools and different ways they can manipulate. Roaring Kitty as well has tweeted. I tweeted a couple times. So we've got 2 tweets that I'm looking at right here. He tweeted a bunch of things today, but here's one of the tweets. So there you go on Roaring Kitty. And then another one, he tweeted this thing. GameStop's there. I don't know, man. It's interesting. It's getting really interesting. What is the kitty trying to say? And is he going to be back? Is he going to be back? Is he actually going to be here and live stream? Is he going to be the Roaring Kitty that everyone wants him to be? I guess we'll see. All right, folks, I'll end it there. Thank you all for being with me here today. Hope you guys appreciated the TJ options episode. And if you want the tracker, email me amit@dailypalantir.com and we will send the tracker and you guys will have it your way. And that's it. Thank you guys. Appreciate it. It means a lot. Darren, I see your comment right there. Appreciates it. Hopefully you guys are enjoying the market open every day. The market open has grown. I was talking with someone else about this yesterday. It's grown and we're doing what we got to do. I think we're finding some product market fit, content market fit on the market open. And I really do think if we keep innovating and we start getting guest contributors and make it more fun, and we don't have to upgrade the humor levels on the show because those are at an all-time high. In fact, we might have even be reaching a peak. So I'm gonna have to work to innovate on how to get those to be even better. But everything else, I think there's a lot of upgrades we can do to the show, make it even better. And in a couple of years, we don't know where the show could be, man. This was 200 people 2 years ago. And I think every day we've been getting close to 1,500, 1,600. So it's been really fun. I appreciate you guys being here. It's the coolest thing to do every single morning. I enjoy it deeply when I wake up and get ready to do this. It's like one of those things where you wake up in the morning and you're just like ready to go. You're pumped. And Honestly, it's a blessing, dude. It's a blessing. I know I've worked for this, but also like it doesn't mean anything if you guys don't show up, right? So every morning I'm just like really humbled that people want to show up and hopefully get value from it. It's not my birthday, but happy birthday as well. I blamed you guys on my neck pain because you guys started wishing me all these happy birthdays. I started getting older and older and older. And now my fucking neck, dude, it's still hurting. It's still hurting. It's not hurting as much as it was yesterday. Yesterday, dude, I legit yesterday was just like, I was like, what is going on, dude? My neck is in pain. And it's getting better, but like it's your fault. You guys made me old. I actually like that I'm getting older as well because majority of the chat is older than me. You know, I'm not talking to like 15-year-olds here. Most of you guys are in the 35-ish range to 50. So I like that I'm getting older as well, and I'm getting older with the audience and hopefully more mature as well, which is why I'm not gambling in the meme stocks. Now, granted, if I had some excess money, I would not be mature. I'd be fucking gambling in them, but we don't have that. And you guys are here seeing the whole journey and play out. And I hope you guys enjoyed the TJ thing, dude, because I'm so grateful that TJ's literally giving me his money to manage. Obviously, it's his money. He keeps all the gains, all that stuff, and he's walking me through it. But I think that's cool, right? I don't think anyone on YouTube has actually like given a kid 500 grand who's hungry to learn about how to do this shit and then walking him through how to learn that shit. You know, I think that's really fun. I think that's cool. And hopefully everyone else is getting value from that as well. When are you going to India? October. Going in October. I'm excited to go to India. We're going to do the market open every day, like 7:30 my time. So we will keep the show going. Probably, I don't know if we're going to be able to do the market close during those 2 weeks. We'll probably be able to do it, but some days, well, let's see. Market close is what, 3:45? 3:45 p.m. EST to India. 1:15 a.m. Yeah, dude, I don't think I'm going to be able to do the market close. So for 2 weeks, the market close might take a break. I would do it at 1:15. It's just, I'm not going to have my own apartment. So like, I'm not going to be able to to ring the bell at that time, but market open, we will keep it alive. What's it in India? We're going to be in New Delhi for sure. Indrapuram, I believe, is where we're going to be. If I'm not wrong. So yeah, around it's going to be in New Delhi in India. And we have a wedding as well. So that's the main reason we're going. I haven't been there in 5 years, so I'm excited to go see family and then do an Indian wedding. I also have an Indian wedding in June, so I have to go to another in Virginia. I have to go to another wedding as well, but that's going to be in America. The word of the day, we did it already, Mario. The word of the day was illimitable. Illimitable. We did it with TJ. It was, let me just share it real quick for those that didn't get it. Illimitable. That was the word of the day. Which basically means boundless. All right. Can you speak Indian? Yes, I can. Now, again, I told you guys, you're Punjabi, mate. Yes, I'm Punjabi. When I go to India and I speak Indian and I like go to like the corner store and I try to buy something and I say it in Hindi, they fucking know. They can smell the American off me. And I remember last time the guy tried to overprice me and shit. And I was like, I knew I'm paying more than I should, but dude, India is so cheap. And we'll see. It's been 5 years, but India is so cheap. I like give them a lot more than I need to be giving them for basic services. Cause I'm like, it's just, you know, I want to, if I'm coming with my American money, I should definitely stimulate their economy a little bit. And those are people that deserve it. So, yeah, they can tell that I'm American. All right. That's it for me. Thank you everybody for being here. Hope you guys enjoyed the show. I will see you guys on the market open 8:45 a.m. tomorrow. Do we have any shows over the weekend? We have Palantir weekly today, 11 p.m. And then what do we have? We have tomorrow. Oh, Sunday, I think I have 2 shows. I'm actually going to be interviewing this girl. So there will be a girl on the channel. I'm pretty sure that's still happening. I'm going to confirm with her today. But Kat Orman, for those that don't know her, I met her at DC. So she's building a startup, and she was at the Palantir event, and she's using Palantir's technology at this event. It's a drone company called Flyby Dev. They're making autonomous drones, and they raised like $5 million. And it's some really cool shit with Palantir. So she's going to be on the channel, and I'm going to be interviewing her of how she's using Palantir software. So I think that'll be fun. And I'm interviewing another guy, I believe on Sunday, around SoFi, Tesla, and a bunch of other stocks. So it'll be super cool. It'll be dope. Also, yeah, we have market close today. I forgot, dude. We have fucking market close at 3:45. How did I forget? Okay. So we have market close at 3:45. It's not Courtney. It's not Courtney. She's super cool, dude. She's like really building some elite shit on Palantir software. And I was just like, yo, you got to come on the channel because I think that'll give people who care about Palantir. Oh, actually, that's not going to be live. That'll be pre-recorded. Yeah, never mind. I'm pretty sure that'll be pre-recorded. So that'll be posted like on Monday. But it'll give people who are seeing Palantir's like working with all these other small companies an inside look on how those companies are actually utilizing Palantir software and building cool stuff. So it'll be super, super cool. All right. That's it for me. Thank everybody for being here. I will see you guys on Monday, and I'll see you guys also later today, and we'll keep going from there. Bye, everyone. See you in a few hours. Goodbye.